Oh, all right. Yo, what's up, everyone? I hope you're having a great day. In this video, I want to go over some stocks that I think are at great buying opportunities. I want to go over my portfolio a little bit. Why did my largest holding just hit a crazy new all-time high? And it's not just momentum, it's the actual fundamentals going up there. So yeah, if you like this kind of stuff, please do me a favor and drop a like on the video for me. And let's just get straight into it. So here's my Robinhood portfolio, known as my dividend-only account. We're up 1.3% on the day and 2.5% year to date, which is not too shabby. Here's the S&P 500 right now on the day, up 0.29%. But let me show you the stock that are, let me just get straight into comfort systems. Then I'll get into some of the stocks that I think are at great buying opportunities. So here is my largest holding right here in my buy never sell portfolio. So at the top left, it's called my buy never sell portfolio. My other portfolio is called my dividend account, where I only own dividend stocks. That's the rule there. But in this account, the rule is once I buy a stock in here, I can't trim it. I can't sell it. So part of the reason we've done so well is because we haven't sold this stock before today. You know, most people would probably trim at least a little bit of their position at like 100% gain or a 200% gain, but we're almost up nearly 300% now. And check out their gangbuster earnings. You won't believe this. So here's their actual earnings right here versus what the analysts expected. That's the orange line. Analysts expected 2.33. They did 2.65. And it's not just a beat on revenue, but their bottom line as well. Their actual net income. They expected 238. They did 330. So obviously net income is just EPS. So or plus the buybacks, but EPS be like crazy. And same with EBIT. So it wasn't some one-time adjustment boosting their net income. No, this was a real organic beat. So that's what I think is leading to comfort systems at an all-time high. Remember, this company has no debt, $900 million of cash on hand. It's the MEP play. They mainly do the mechanical and electrical work, the complex MEP work for these data centers, hospitals, and a bunch of different sectors like office buildings, government buildings. So yeah, it's an HVAC play. So this is your main AI beneficiary CapEx spend. You know, of all the Mag 7 spending crazy money on CapEx, this is a pure beneficiary of that. And that's why we've seen a lot of these picks and shovels plays go to like all-time highs, like a Powell Industries. They kind of do similar what Comfort Systems does, the complex electrical work, you know, the switchgear solutions over there. So yeah, that's that company. But let me get into a stock that, you know, it's obviously, I don't think this is a good buy at all-time highs, but I want to show you some stocks that I think are at good buying opportunities right now. So the first stock I actually want to go over is Visa. If you don't have any exposure to fintech, I actually think Visa's a very good company. It's a quality name at a great valuation. Check this out on the right here. This is why I think they're at a great valuation. On the right, the forward PE, which is their forward net income. Basically, they're trading at 24 times next year's net income. That is super fair for a quality name like Visa. The S&P trades at a 28, so definitely cheaper. And as we can see, their net income, well, they've had some one-time adjustments. They've been slightly missing on net income, but pretty much they're making like, well, here's their net income right here. Even with the adjustments, they're still making over $5 billion of real after-tax net income a quarter. That's crazy. So what is Visa doing with over $5 billion of after-tax net income a quarter? Well, if we head over here to the dividends, they pay a dividend on the right. It only cost $1.3 billion, but the real winner for Visa is the share buybacks. Check this out at the top here. Every quarter, they do $3 to $4 billion, and all for eternity. They've always done this, even all the way back to 2018. They always spend billions of dollars a quarter on share buybacks, and the buybacks that they did like years ago are so accretive to right now stock price. So it's a great dividend growth name that's shareholder friendly. 25 forward PE, 0.8% dividend yield. Check out that dividend growth. That's what you want to see. Because they have such a low starting yield, you want to see that crazy dividend growth. So that's what Visa has. Anyway, I think it's a great dividend growth name. There are a little bit of fears around like a 10% credit card interest rate cap, but I don't think that'll happen. And look at this, Visa to acquire Argentina payment platform Prisma and NewPay from Advent International. So they're doing acquisitions right now. Since they have so much leftover net income, they can just do acquisitions. So that's why Visa, I think, is a great stock to put in any portfolio. So next up right here, this one's a bit of an obvious name we've all heard of before, but I legit cannot believe how cheap Microsoft is. Nearly every company in one way or another uses Microsoft in their products. And let's see if there's any news. There's always news around Microsoft right here. $50 billion investment, expand AI infrastructure in the global south. Oh yeah, this is the great news I wanted to find. Microsoft extends OpenAI revenue share agreement to 2032 and secures 20% of their total revenue. So it's like a royalty. They just get that royalty, 20% of all their sales, and they have a 27% stake in OpenAI. So that's how Microsoft gets exposure to to AI. So on the right, this is the part I can't believe. they trade at a 22 forward PE, which means, of course, they traded 22 times next year's net income. For the behemoth Microsoft, I can't believe how good of a deal that is. They have three main businesses. Here's their software business. This is why they're kind of being categorized with software, with the software dip right now, because 42% of the revenue comes from their software, like Office, Excel, spreadsheets, all that. That actually does over 120 billion of annual revenue. I can't believe the annual growth. Like, they're still growing it. 120 billion just in full year 2025. Who knows what it'll be the next year's? And it's not just their software business doing amazing, but their cloud business, their Azure cloud. Check out these year-over-year growth rates in the middle. 29% year-over-year growth. Here's the annual revenue. Another business that does over 100 billion of annual revenue. So that's what's so great about Microsoft. They had a slight one-time adjustment to their net income right here. So we'll really just look at this, the before tax number. As we can see, the profits on Microsoft are just up and to the right. This is the before tax number. We can look at the after tax number. It looks just as good, but it looks even better because they had a one-time adjustment. Basically, excluding this one-time adjustment, here's the net income. It's just a straight line up over time. It's a high margin software play and a cloud play. Great balance sheet, but they are spending a lot on AI right now. Like all the Mag 7 is. If you look at the bottom, they're spending 20, 30 billion a quarter, and they're going to continue to spend like 40 to 50 billion a quarter for these next for the next year and next couple quarters. So yeah, that's one thing to watch on Microsoft. So this next company I'm super excited about is Uber Technologies. A lot of people use Uber, and if you use Uber, why not own some of the stock? Now, there are a little bit of fears around Waymo and robo-taxi. Yeah, check this out. Uber faces intensifying robo-taxi competition. Waymo is a huge company. They just at 120 billion valuation. Waymo is worth nearly the same as Uber, but has like way less revenue. But yeah, Uber's investing over 100 million in vehicle charging infrastructure. That's pretty cool here. So anyway, let's go look at their fundamentals. And I want to show you the forward PE specifically, because on the left, it says they're at a 15 PE. They had a one-time adjustment. You really look at the forward PE, which is next year's net income. They're at a 22, and that's real. They're literally trading Uber. Like, that's what's crazy. Microsoft's at a 22 forward PE. Uber's at a 22 forward PE, and all their metrics are at a record. Like, check this out. I love this. This is their monthly active consumers. So, people actually consuming their product. It went from 171 million to 202 million just year over year. Incredible growth. Here's their mobility ride sharing business. If we go to on a quarterly basis, these are the growth rates you want to see in the middle here. Up 18% after 25, after 34, after 73. Just incredible growth. And not just the mobility business, but also the delivery side, which is Uber Eats. This is even growthier. The growth rate, it's up 29%, after grew 20, after grew 7, after grew 21. So the growth rate is growing on Uber, which is incredible. And here's again, they had some one-time adjustments. They said they made 6 billion last quarter. They didn't actually. So we're just going to look at the before tax number to kind of just prove the point that they are the most profitable Uber has ever been. Oopsie, record profits, and not just, record profits, but free cash flow as well. This is the free cash flow. That's what FCF stands for on the right there. It's at a record. It's never been higher, up 64% year over year. Operating profit, or basically net income's up 130% year over year. Every metric's doing incredible. And since they have so much leftover money, they're actually doing acquisitions. So someone just said, how about Grab? Yeah, so Grab, this is a company. Uber is a big shareholder out there, actually the largest shareholder. So if we go to shareholders right here, Uber owns 13% of this company. So they're the most to benefit if the stock goes up. And why was it so genius for Uber to buy this company? First off, I love Grab. Look at their profits right here. Same scenario. Grab, it was genius of Uber, is at a record profits, 98 million this quarter. But here's the cool thing. This gives Uber instant international diversification, because Uber's kind of losing international. Like they've won the US and UK and Canada, but these other countries, this is their way to get exposure and diversify internationally just by buying the winner over there, Grab. Look where their revenue comes from. Notice the US and Canada aren't on here. It's like a pure international commodity ride sharing play. Malaysia's 29%, Indonesia's 22%, Singapore 20%, Philippines, Thailand. So it's like an international Uber. So yeah, Grab's pretty cool. So the last stock I want to go over, and then we'll dig into y'all stocks. What's up? Sorry if I'm missing the chat here. Good to see you, Clem in New York. Michael Anthony, just call me and spread the wealth. Good to see you. Someone says, how long have you been holding Fix for? Yeah, I've been holding this stock for almost exactly a year. I bought my first ever share in 2025, January. Right, it was right after what was this day called? The DeepSeek AI day, if anyone remembers that. That was my first opportunity to buy this company. But yeah, I've been holding that one for a while. They're at an all-time high on some phenomenal earnings. So for the very last stock here, then we'll deep dive into y'all stocks for sure. Okay. All right. So for this last stock here, I think this is a great advertising play and a phenomenal never sell. Even after their little rally, I guess this app is telling me that there's a bearish flag. But anyway, I judge a company off their fundamentals, and Meta has some incredible fundamentals. And I love what they're doing. They're actually reviving their smartwatch project. Pretty cool right here. Oh yeah, Zuck is testifying the youth safety trials. And he actually says teens account for only 1% of revenue. I guess because they don't have a credit card, they can't click on their ads and stuff and actually buy anything. So anyway, Meta's an incredible company, and they're introducing ads now to Threads and WhatsApp. If you've heard of those two apps before, Threads nearly has the same amount of daily active users as X, so they're introducing that adds to those two apps. That's going to be a great earnings tailwind. And right now, again, it's another company where you want to look at the forward PE because they had a one-time adjustment last quarter. If we go to their net income right here, last quarter, as we can see, it was only $2.7 billion. If we zoom out, it's never been that low before. That's because it was a total one-time adjustment. It was a one-time $15 billion tax charge. So one-off, one-time expense. So that's why I like to look at the before tax number. Again, you got to subtract 20% for the tax, but record profitability quarter, 25 billion, never been higher before. Record revenue, 59 billion of revenue, and the forward PE is dog cheap. Meta legit trades on the right at a 21 forward PE. Here's their active users, 3.54 billion daily active users for this quarter. And they get money from all over the world. The US is only 37% of Meta's revenue. A lot of people around the world love their apps, Facebook, Instagram. Actually, they just disclosed the average Facebook user makes Meta over $50 a year, which is pretty insane. But check this out. One thing being questioned on Meta is how much they're spending on AI. If we go to their cash from investing activities, they're spending more than they're making. This quarter was 35 billion. They only make a net income, 20 to 25 billion a quarter. And they just projected they're spending 150 billion just in 2026. So they're going to be spending like 40 billion a quarter for the next 4 quarters. But I'm a believer in Meta. This high CapEx spend isn't scaring me out of Meta or Google. I just love this company, and I'm a shareholder, so I'm totally biased, but I own them for a reason because they're at a 22 forward PE. I actually just bought a little bit fractional share more of Meta, but yeah, we're up 24% all time on them. Not some incredible return, but pretty good. Actually, I kind of want to go over one more stock. Okay. Last stock I want to go over because I just bought one more share of this. It's not some huge position for me. I don't really recommend anyone have this as a meaningful size position. But here's what I love about InnoData. I just bought a share at $45 and it's $45 today. Well, I just bought a share today, literally today. InnoData, they just got a massive or 2 massive contracts. One from the government, the Golden Dome contract they got, and they got a huge contract with Palantir. So they're actually going to be collecting a portion of Palantir's government contract revenue, which is pretty cool. So this is a data labeling company, basically the same thing as Scale AI that Meta just acquired, and Meta basically took them off the market. So that makes this company even more valuable. Again, what I love about InnoData, it's the software play that's already profitable. Here's their profits right here. They're already extremely profitable. They are a little bit expensive, but that's because they just got net income positive. And check out how they're beating on their metrics every quarter. Analysts expected 59, they did 62. And check out the expectations. It's going to 72 mil in 2 quarters, and not just beating on revenue, but their bottom line, their net income. They expected 4 mil, they did 8 mil, so they doubled. And so they beat by double on EPS and on basic EBIT, earnings before interest and taxes. They expected 6.5, they did 11. So this is why I like this name right here. They're only worth, if you look in the top right, only worth 1.45 billion. So they're still small, but that's what I like about them. Their actual largest customers are actually Google, Amazon, Nvidia, and Meta. 5 of the Magnificent 7 are customers. Palantir's a customer. The government is, the federal government. So anyway, they're already profitable. A little expensive. Actually, not really. I mean, you really look at a PEG ratio because they just got net income positive, a 41 forward PE. But InnoData just seems like a cool software name. I just bought one more share. I don't really recommend having this one as a meaningful size position, but their fundamentals look great to me. Hey, good to see you, Sam. I hope you're having a great day. Trump announces new global tariff, 10% global tariff after the Supreme Court loss. Uh-oh, did the markets move on that? Let's actually go check out the S&P 500. Yeah, let's look at some of y'all stocks now. Sorry, I wanted to make a quick video at the beginning of the stream right here. Dang, look at the Qs. Actually, we're almost back to a new intraday high. Yeah, not too shabby. Okay, let's see. Good. What's up, Andy? He says, charge your phone. Yeah, you're right. I definitely need to do that. Amphenol stock. Yeah, Herdish. I love Amphenol stock. I've been buying this stock as well. There's my little buy orders. This is a huge AI CapEx beneficiary as well. Two of their main customers are Google and NVIDIA. Mm, NVIDIA for their fiber optic infrastructure and their copper cable solutions. That's what Amphenol does. So Spread the Wealth said PM stock. Let's actually check out PM. This is a great dividend name that actually gives some nice stock price appreciation. So this chart doesn't even include the dividend, and the dividend's been phenomenal. So check this out. If you just buy the stock right now, no matter what for the rest of time, or assuming the company doesn't go bankrupt, you're getting 3% of your money back in a qualified dividend, no matter what. And historically, you get 3% dividends and like 4% to 5% stock price appreciation for a total return of a 9% a year. So PM's actually been really growthy. Why are they so growthy? Well, it's because they're growing their Zen business. And I don't want to talk about this industry too much because I might get in trouble, but it's been growing way better than analysts thought. So it's up 12% after grew 9, after grew 21. So this business is doing phenomenal. So, and they're at a 23 forward PE. So even at this all-time high level, it's not some ridiculous multiple. It's only at a 23 forward PE. And the nice dividend too, so a 3% yield. That's one I like. A lot of these defensive names are at all-time highs. I'm pretty sure Walmart's close to an all-time high. Coca-Cola, McDonald's is pretty much at an all-time high today. So actually, Coca-Cola consolidated, the Coca-Cola bottler. This has been one of my best investments so far. They're at an all-time high today, but pretty incredible. Okay, let's check out. What up, Monkey D. Luffy? Amazon likes the news. Yeah, that's what I was just reading an article, like these e-commerce names. And let me see if I can find that. Anyway. Oh, yo, did anyone see CrowdStrike? That's the Claude news. Yeah. So Claude, which Google owns 14% of and Amazon owns 30% of, just released Claude cybersecurity. And on that news, cybersecurity names like CrowdStrike dropped 6% instantly. So almost like Claude, which is Anthropic. Anthropic owns Claude, and Amazon and Google are big shareholders. That gives them exposure to cybersecurity. So anyway, they're having a great day. This is one of my best purchases. I was really recommending this stock during the dip down here. I'm like, it can't get any cheaper. The risk to reward looks so good on Amazon. So that's why I loaded the boat. I bought, well, not crazy, but I bought 7 shares of Amazon. And even though Amazon's up 3% on the day, they're definitely going to go up more. Well, not financial advice here, but if we look at them on a forward multiple, I mean, the point is they're still cheap. On the right, they're at a 26 forward PE. And Amazon actually today, after Walmart reported their full year 2025 earnings, we have full year 2025 Amazon earnings. They have more revenue than Walmart, $717 billion in revenue in annual sales. So if we just go to revenue right here, look, this is a crazy number, but Amazon did $213 billion of revenue just this quarter. And when we include the other, this is the trend on Amazon. Like, that's what I love to see. That the past 4 quarters combined is more revenue than Walmart does. So they're actually the number 1 Fortune 500 company now because they have the most revenue. But here's the crazy thing. Amazon sold off right here. Like, there was this crazy sell-off because Amazon's crazy CapEx. But this is the thing. Amazon's revenue's at a record, as we can see on the right there, and their profits are. Like, that's the thing. Like, the fundamentals are all at a record. They're just scared that Amazon might not get a good return on their investments. But I believe in Amazon. They're smart, and that's why I'm a shareholder. Also, they're growing faster than Walmart, yet Walmart is trading at a premium. And Walmart's a low margin. Let's see what Walmart's net margin is. I know they have a great real estate business. What's their net margin? Let's see. Walmart, so yeah, obviously grocery store, low margin business. Here's their net margin, 3 to 4%. Those actually one-time adjustments. So they're lucky to have a 4% net margin, we'll call it. Check out Amazon's net margin. Obviously, Amazon's different because they own like cloud businesses, but Amazon's net margin, it's phenomenal. It's double digits, 9, 10%. So, gross margin of 40. So yeah, Amazon, I do like their Whole Foods business. It's hard to compete with Walmart and Amazon. Those are the 2 winners because of their online presence, because other grocery store chains, and this is a huge L for me. Actually, I'll just show you my position. Other grocery store chains like Sprouts Farmers Market, like anything you can get at Sprouts Farmers Market, you can get at Whole Foods and Amazon. And Amazon/Whole Foods will actually deliver it to your door. And Target, Sprouts Farmers Market, they don't really have that online presence that Amazon does. So they're kind of being out innovated. And that's why I'm just Amazon's an ETF in one. Great, never sell. And that's why they're in my never sell portfolio. What up, afternoon, Rolando? The companies that are spending on AI will come out on top. Yeah. You know, thanks for telling me about Fix. Yo, Kevin, I'm so glad if you own that one, congratulations. You got to be up on Comfort Systems because they're at an all-time high today. I'm super excited about that name. Happy Friday, everyone. I hope everyone's having a great Friday. What up, Sam? Yeah, W Amazon. What are your thoughts on JD stocks? So I'm not a big fan of the Chinese retailers. You know, I'd much rather buy an Alibaba than a JD.com, and it's a Chinese ADR. I just don't really buy these anyway. Like this stock historically, dang, is it at its IPO price? So JD.com is literally the same price that it was in 2014. So, you know, let's convert the currency to US dollars just to get a bit of an idea. So yeah, if we look at the forward PE is actually higher than their current PE. So the net income is actually expected to go down. But yeah, you know, I'm not a big fan of the Chinese retail business. But Alibaba's a bit better because actually Alibaba, what's cool about this one is they have this growing cloud business. So if we go over here, check this out. Yeah, they're intelligent cloud, kind of like Microsoft does. And we need to convert it to US dollars as well. But yeah, they have this cloud business that's growing like a beast. It's up 33% year over year. It's actually surprising analysts. So Alibaba's almost like a Chinese cloud play. They own like a big chunk of DeepSeek too. So Alibaba's actually, I think, a better play than JD if I just had to pick one. Plus they own AliExpress, which is like an e-commerce play. I've been waiting for Fix to div. Yo, I'm sorry. Yo, Tricky said NOK Nokia. You know who owns Nokia is actually not Amazon, Nvidia. So here's Nvidia's portfolio. To make the government happy, they bought a bunch of Intel stock and giving Intel some of the chips to manufacture. They own CoreWeave, Synopsys, and one of their recent buys is actually Nokia. It's 7% of their portfolio. Actually, checked it out. Nokia is pretty much at a 52-week high. So congrats if you own this name. You know, you're probably up on your money. Obviously, they're nowhere near where they were. Like, sadly, this stock is the same price that it was in the year 1999, but that's because they lost the smartphone war to Apple. But now they're like, I don't think this is even like a smartphone business anymore. Yeah, like network infrastructure, mobile networks, cloud and network service. So I wonder if there's like an earnings recap we can read here. Network infrastructure led revenue growth with a 17% increase in optical networks. Mobile infrastructure segment was recognized to focus on core networks, radio, and technology. Okay. Oh, strategic acquisitions included in FINRA in full ownership of Nokia, Shanghai Bell. Okay, anyway. They're actually at a pretty decent forward PE on the right. Like on the left, they look expensive at a 55, but on the right, the forward PE is only a 26. So that's actually like, honestly, I don't know much about this company, but it could maybe potentially stretch up another 10, 20% to like a 29 forward PE before it really maxes out. So it looks like a lot of the revenue doesn't come from the US. The US is only 26% of revenue. And here's their net income right here. Actually, this quarter, so here's their profits are kind of flat when we zoom out here, but like, it's still pretty consistent. Like on average, they're still making like a couple $100 million a quarter if we average it out here. So it's not too shabby on Nokia, and you get a 2% yield. Not a super quality one, but I'd keep the allocation that one low. I'm Amazon's number one hater. What's up? What up, man? How do you feel about utility crypto like Hedera? Oh, HBAR? You know, I don't own any crypto actually. But yeah, if I was going to buy crypto, I'd want to get one that has like a real utilitarian purpose to it. But I would really, I don't own any crypto, but if I wanted to, I would stick with like the top market cap ones. But my favorite way to get exposure to crypto, and I just bought another share of this today and a couple days before, but is Webull. So in Robinhood, Robinhood are beneficiaries of crypto because every time you do a crypto contract or do a prediction market contract, these brokerages like Webull and Robinhood just collect a high margin fee. So they're like the picks and shovels play of fintech. So I love Robinhood, Futu, Bull. I own all those stocks. So actually that's all three of these brokerages. You see these apps I'm using, Moomoo, Robinhood, Webull. I own all their stocks as well. Yeah, here's Robinhood stock. I don't own much of it. Sadly, that's one of my biggest regrets is trimming companies, selling out of great stocks. Like here's my Robinhood position. I sold 50 shares and way more at $36 a share. Well, Robinhood today is 76. You know, I'd be up another double, but oh well. That's why I actually created this portfolio called my buy and never sell account, where once I buy a stock in here, I can never sell it. And hey, shout out Trust Thy Word, dude, for the roses. I appreciate you. And Sam as well, dude, if you're still in here, thanks again for those 5 roses. I do appreciate that. Rolls-Royce. Hey, what's the ticker symbol for Rolls-Royce? We'll actually check that one out. Oh, Luffy said AMKR. So yeah, actually, I think I know the ticker symbol for Rolls-Royce. It's RYCEY. It's an ADR. LITE. Hey, what up, Les? We'll look at Light. And sorry if I missed out on some names here. I'm a little all over the place. I apologize. So here's Amcor right here. And Looney says has a $7 billion factory coming online in 2028. And that's a big portion of their market cap. Like if you look in the top right, the market cap's 11 billion. 7 billion of that is half the market, or more than half the market cap in this new facility. And if you look on the right, this forward PE is actually pretty good. It's a 25 forward PE, which means they're trading at 25 times next year's net income. That's why I could see this one stretching up higher and higher. Let's see what they do. Advanced products. And what's their other business here? Mainstream products. So let's see what the net income projections are. They had a great beat this quarter. Whoa. They expected 109 and they did 170. So no wonder they gapped up on earnings day. Yeah, it was a real beat on EBIT and everything. EPS was a good beat. So that must mean margin expansion. Yeah, check this out. The revenue's up 15, but the profits are up by 37. So that's margin expansion right there. So yeah, honestly, I like this one at a 25 forward PE. Let me check out their website. Oh, and you get a yield, a 0.7% dividend yield. Let's check out their website if we can just get an idea of what they sell. Advanced IC packaging. Okay, we couldn't really find any pictures, but there you go. Some sort of semiconductor equipment play. And with the huge CapEx spend, I bet they're going to be a huge beneficiary. Is this legit, chat? Yeah, what up, Frank? I don't know. I'm just on here giving my opinion. Nothing on this is financial advice. I sell nothing. Just on here giving my opinion. So here's Rolls-Royce. It's actually an aerospace and defense play. You look at a lot of the aerospace and defense names like a GE Aerospace, a Raytheon. They're all-time highs right now, and that's why Rolls-Royce is at an all-time high. This is an incredible looking chart. A lot of people, when they think of Rolls-Royce, they think of the cars, but I think that's like split off into a different business. Because check this out. Rolls-Royce, this stock right here, 50% of their revenue, literally half of it, is their aerospace business. They make jet engines and stuff like that. And then 24% of their revenue is their defense revenue, power systems, and they're geographically diversified as well. Like, look at that. The US is only 28% of the revenue. And then there's a bunch of other countries that make up the other 31%. So pretty cool. And here's their net income right here for the first half. Again, they're European. So, or rather, we'll convert the currency from British pounds to USD. That's why they report in halves. That's why it says H1 in full year, because they're EU. But they did $6 billion in net income in the first half, which is incredible. I think that was a big beat on what analysts thought. Oh, did we get EPS projections? Yeah, we kind of do. I guess the full year. Oh, yeah, I guess the EBIT projections. Yeah, look at that. Earnings before interest tax. It was a great beat. Really big beat. So nice. What's the valuation, though? I probably wouldn't buy it today. I mean, not crazy. At a 30 forward PE. I mean, that's not nuts. GE Aerospace has been good, too. Okay. What's this one? He said he was going to ban items coming into the USA. Oh, like imports? That wouldn't be good. Love Bull, been buying small amounts recently. Yeah, Bull is one you want as a small size position, but I just really like them. I think they're going to get really profitable. So let me go to, hey, Ahmed, what's up, man? My bad. I'll get to LGN. Don't worry. We'll get to that one. Les said LITE stock. Let me get to Light. He said it's on a huge run. I'm averaged in at 288. Any thoughts of adding at these levels? Ooh, so would I add to this stock at all-time highs? Probably not, but let's go dig into the numbers and see. Yeah, congrats if you own this one. Crazy new all-time high. Wow, are they a memory play? So they do components and systems. Basically, these profit projections are phenomenal. The revenue is going to go from 70 million to 280 million. So I can see why this stock is at an all-time high. It's pricing in this future growth, and they're beating on expectations. Like this quarter, they expected 137. They did 167. And it's only going up from here. It's going to be 240, then 280. And if you annualize that number, like look at the revenue too, it's going to go to nearly $1 billion in revenue. It's going to double. Revenue's going from 480 to $1 billion. So I can totally see why this stock is at an all-time high. Yeah. Basically making their first ever profits, and the profits are just, going up from here. Anyway, let me see if this is a memory play. Communication equipment, optical communication. I need to do some more research on this one. Huh. I guess they look like a SanDisk almost. Their chart, it's so phenomenal. You know what? I'll put them on my watch list. Some AI infrastructure play. Very nice. So let's do LGN for the homie Ahmed right here. And then we'll look at Bull. Man, I sold out a Rolls Royce. Would have been a crazy hold. Right now, I'm a Bull bag holder. Hey, we'll look at Bull after this for sure. I'll give you my thesis on that one. So LGN stock, Legence. Wow, is this that HVAC company? Yeah, I remember they IPO'd not even that long. Yeah, October 2025. So they've been public for like 6 months. Let's see how they're doing. So yeah, installation and maintenance, engineering and consulting. So so again, they just IPO'd, so we don't get too much data. So let's see if we can find out their numbers here. Sorry, oh dang, my phone. I didn't even realize my phone is getting low here. That's okay. But wow, look at that revenue. That's a record revenue. Even if we zoom out, 708 mil of revenue, up 26% year over year. And the profits are up 46. So yeah, they're making like 30 mil a quarter. And let me read what they do again. So yeah, installation and maintenance, or engineering, consulting, HVAC, and other MEP systems. So pretty cool. They almost are like a mini comfort systems, and it should just benefit from AI. Wow. Pretty cool. Congrats if you own this one. Is there a forward multiple? So a 37 forward PE. There is no current PE, so the 37 forward PE is great. Huh. They're on my watch list. I got to do more research on them. But yeah, they're a nice HVAC play. It feels like all the HVAC plays are at all-time highs. Like Comfort Systems right here, all-time high today. Maybe they're just following their successor. I wonder if they reported earnings same day. So let's go over Webull real quickly. I am a user of Webull, and that's why I'm so bullish, because I've been using their platform for many years, and we have not done too good. If you look in the top left, our open profit and loss, we're only up 7% all time. But why I'm bullish is because on Webull, I noticed as a user, right around when they IPO'd, if you look in the top right, they added in predictions in crypto. You see how it says new above it? Because they just added in these features. And this is Robinhood's like claim to fame. That's how Robinhood is printing so much net income, because of these prediction market contracts. And Webull just got into them because they keep 2% of every prediction market fee. The Super Bowl prediction markets were huge. So anyway, I'm just more bullish than the analysts are. So I think they're going to beat like crazy on their numbers next time they report earnings. So I'm basically holding this one for their earnings report. And even though I love them, they're still kind of expensive. Like if we look at the stock, they're at an all-time low. Even though that they're at an all-time low, they're still a little pricey. So that's why I wouldn't go crazy in Webull. I only own $480 of it. It's one of my smaller positions, but I did buy a share today. You see, I just kind of buy one share at a time. Every time I get a little bit more money, $6. Every time I get a dividend or something, I'll transfer it over and buy some shares in there. Dang, we're almost back to a intraday high. Let me check the S&P real quick. Wow, S&P 500 as we speak right now is at a new intraday high. So congrats if you're own stocks, because probably doing good right now. Okay, so yeah, that's kind of my thesis on Webull. The forward PE, they do have one. It's a 43, which is like, I can't believe Webull's worth only $3 billion. Like, I know they have a weird share structure, but like, it's worth a very small amount of money, or having a little bit amount. Hey Nathan, I live in Derby, where we build the RR area engines. Oh, the Rolls Royce engines. Oh, hey, that's pretty cool, Clem. That's pretty cool. All right, what should we look at next? I saw someone saying prop stock. You know what, for BG, we'll look at prop, and then we'll look at, I prefer MTUAY. What's MTUAY? I typed it in wrong. MTU, I can't type. So this is another like ADR name that's at an all-time high. We just saw Rolls Royce was at an all-time high. The stock is also at an all-time high right now, and the app is this brokerage is telling me, what is this right here? There is a bullish continuation triangle. So if you like technicals, they say the rise probability is an 86% chance. Let's see what they do. So commercial maintenance business, if they do like aerospace maintenance repair, that's a great industry to be in, because every time there's even a little dink in the jet plane engine panels, like they redo the whole test and everything. So commercial and military engine business. So yeah, so they're kind of like an international GE aerospace almost. So yeah, that's pretty cool. And let's see what they have a forward PE. They probably do. Oh yeah, the forward PE is a 22. So even at this all-time high level, we were looking in euros, so we'll convert the currency now. But even at all-time highs, they're only trading at 22 times forward net income. And actually, most of their revenue, even though they're a European company, most of the revenue, 70% comes from North America, which is where you want to be. And here's what they're reporting versus what the analysts are expecting. Yeah, good beats on net income every quarter and revenue. So I can see why that one's at all-time highs as well. Oh, Micron stock. Do you work in finance? No, I don't. I want more disposable income. Yeah, I feel that. But yeah, we're just going over stocks to buy again. The goal isn't really to get rich quick. It's to slowly build and preserve wealth. Like the goal is to snowball your money at 10% a year. You know, you buy the S&P 500, you get 10% of your money back. So you turn $100 into 110, then you snowball it. That 110 the next year turns into 125, and then the next year to 150, and then you kind of get the point there. And as you deposit more, reinvest the dividends, you get that snowball effect. All right, let's go over this next one. Oh, Micron, let's do Micron. So this is your memory shortage play, and I actually wouldn't be shocked to see this company like pretty easily climb up another 20, 30%. So if I was a shareholder of Micron, I would not be selling. Maybe a slight trim, but I really would not, I definitely would not fully sell out of Micron for the profits. Because if you look on the right, this is why even at this all-time high level, on a technical point of view, they look super expensive, but on a fundamental forward basis, they're actually kind of cheap. If we look on the right, the forward PE is at 10. That means they trade at 10 times next year's net income. And here's the estimates. Here's the actual numbers that analysts are projecting. This was already a record quarter. Like here's their net income this quarter, $5 billion. If we zoom out, you know, it's never been higher than $5 billion before. So record quarter. Next quarter, it's going to be $9.5 billion. And then the quarter after, $11.3 billion. These guys are fully booked out into like 2027. There's this huge memory shortage right now that's tanking like PlayStation's margins and tanking Nintendo Switch, like Nintendo stock. They're blaming this. Oh, and Apple is too. They're blaming the memory shortage for the margin collapse. Yeah, Micron faces unprecedented RAM shortage as AI demands. Spot prices are up 30%. Morgan Stanley raises price target to 450. So anyway, Micron's a beast, and then the net income's still going to have, it's literally going to go from 1.8 billion to 11 billion. It's going to be like 1,000% increase. It's just nuts. And you get a small dividend yield, but that's why I would not sell out. That's why I think Micron could stretch up like it's a 10 forward PE. I feel like it could pretty easily go to like a 13 forward PE, send this up 30%. So anyway, that's kind of my thesis there. It is definitely tough buying today. So if I didn't own any shares and you still wanted exposure, I'd keep the allocation very, very low. But if you was a shareholder already, I really wouldn't be trimming or selling. Can you show all your stocks watch list? Or yo, there's way too many stocks for me to go over. I have so many watches. I'm not even sure which one you're talking about. But if you have a specific one, like it's my never sell watch list, that these are the names I watch the most right here. I'm going way too fast over it, but yeah, anyway, just let me know. I have like a safe never sell watch list, a good high yielders, safe high yielders, my hidden gem watches, my zero debt, this has definitely changed to every stock I own. Dang, that's real old. That's when I used to own Hershey's. Yo, this is a real old watch list. Okay. All right, let's look at some more stocks here. Do you trade options? No, I mainly just buy and hold shares. And you know what's cool is if you buy, right, I just buy growth stocks. I get similar returns, if not better returns than the crypto traders and the option traders, simply just by buying and holding, you know, great quality names. So that's why even doing the most boring thing, you know, it's boring to a lot of people, just buying and holding great names like Google and Meta and stuff, but you can get returns better than like the crypto and option and prediction market people, which I don't even know how good those people's returns are, but I just think it's the best way. So I just bought AMKR for 3-year hold. Mark your calendar. I got you, Looney. Nice one. Iris Energy, please. Yeah, what's up, WX? Let's do it. Oh, and AMD too. Actually, he said AMD or Iris Energy. We'll do Iris Energy later if you remind me. Let's actually do AMD because I am a shareholder of AMD. Then we'll do, that one, dude. I saw Celsius was on the run up today. We'll look at that one. Trust thy word, the stock F200. I'll see if I can find that one. Oh, we'll definitely do Axon. Yeah, trust thy word. Definitely. Yeah, let me get my phone charger. You're right. We can't afford my phone. Okay. Let's do it. So AMD, then we'll do Axon and whatever after that. How long do you hold? Long-term or short-term? Usually very long-term. So anyway, sorry. Okay, phone's charged. Perfect. Okay. The stock I wanted to go over is AMD. This is my favorite. Well, it's a great semi play. I did just trim one little share of AMD up there. But I always just thought this was like an easier double than an NVIDIA, because if you look at the top right, AMD's worth $330 billion. So for you to double your money, they have to be worth $600 billion. But if you buy NVIDIA stock right now, if you wanted to buy the main semi play NVIDIA, they're worth 4.6 trillion. So for you to double your money, you buy a share of Nvidia right now, for you to double your money, Nvidia has to be worth over $9 trillion. And it's just the law of large numbers. It's just a tough double on Nvidia. So I actually picked up AMD, and they have just as good growth and fundamentals. So if we look on the right, the forward PE is a 45. It's way cheaper than its 75 current PE. And if you look at like the year after, they're at like a 34 like year after forward PE. So they're actually like on a PEG ratio, price to earnings growth, they're actually at like under a 1. They're pretty cheap. So if we go, well, even though that said, I wouldn't go crazy at current prices. I'd keep the allocation very low to AMD right now. But yeah, they have a big market share, a 15% GPU market share. A lot of their revenue comes from data centers. They're projecting like 30% annual CAGR of their data center business through 2030 as a growth rate. And check this out, it's up 39%. After it grew 69, after it grew 40. So they're on a streak of data center growth right now. And if we just go to their projections, yeah, they're beating on numbers too, like the orange lines, what the analysts expect. The past 3 quarters in a row, they beat on expectations. They beat on revenue. They beat on net income. And if we just zoom out right here, and this looks great. Net income's at a record on the right. Revenues at a record on the right. They have no net debt. They have a really good balance sheet. So that's what I like about AMD. I might be biased, and they have real free cash flow, 2.4 billion of free cash flow, because they don't have crazy CapEx like the Mag 7 do. So they have real growing free cash flow. So anyway, I do like AMD. Here's the revenue breakdown. 32% comes from US, and then China's 22 in other countries. So yeah. Let's see if I can find up the news here. AMD guarantees a $300 million loan for Crusoe to purchase AI chips, agrees to rent chips if the startups lack customers. Whoa, that's actually not great. That's actually kind of weird, but all right. Oh yeah, NVIDIA secured a multi-year AI chip deal with Meta, estimated to be worth $50 billion. That's actually crazy. That's like $50 billion in revenue, like just for NVIDIA or something. That's crazy. But anyway, that's AMD. Let's check out TOK said USAR. I think that's USA Rare Earth. This is one of the rare earth mineral beneficiaries. So right around this time right here, this is when the US was taking stakes in all the US's rare earth mineral plays. Like the US needs to be more rare earth mineral independent because we relied too much on China. So the US was taking stakes into like, what was that one? MP Materials and like LAC, and they were taking stakes in all these ones. I don't know. Actually, I think the government did take a stake into this one. I don't remember, but anyway, I don't love, they still don't have any revenue. So if we go to the revenue right here, it still says no data because they've never sold anything. They've never sold a product or service, so they have no revenue. Pretty leveraged balance sheet, more liabilities than they have assets, and they lose net income. Dang, is that real? Like just this quarter, they lost $250 million. So I just don't love companies that have no revenue, lose net income every quarter. But it's still this is a trade, like you buy the stock to swing trade it, yeah, if the China escalations, like tensions get worse, then that should benefit, but I'd just be careful just because they have no like revenue yet. It's hard to judge it fundamentally. I made my first 10K, then started putting that into long-term investments. How long have you been investing for? Yeah, I've been investing since I was 18. I was 19 trading penny stocks. Nice. Let's see. App name. Yeah, if you want to get this app, or I'm on a brokerage right here that I'm on right now, analyzing stocks. It's in the link in my bio, the very first link there. If you want to get this little app I'm on, it's my favorite one. It's my affiliate link. But someone said SoFi. I've been holding AMD since it was $30. Dang, Native, you gotta be. Dang, you have a great cost basis. Then we'll do Roblox. Hey Nate, good to see you. What do you think about buying defense stocks prior to the strikes? Yeah, we'll check those out too. The U.S. military fleet is at like a record of like everything right now. And you kind of want to be like a Raytheon, selling the bullets every time the missile gets launched. Like anyway, I'll go over Raytheon's a great one, but it's kind of tough because every good aerospace and defense stock is at an all-time high right now. It's kind of pricing in the future growth that's going to happen. So it's kind of tough to buy any of the aerospace names, but I do have some ones I love, like RTX. So let's pull up SoFi real quickly. Thank you. Who said that one? Positive. What's up, man? Yeah, SoFi is a great growth name. This is a like pure fintech growth stock. If we go right here to their revenue breakdown, if you're a shareholder of SoFi, the metric you want to watch is this one. It's their financial services business because it's the most growthy, and this is what's leading to them beating on expectations every quarter. Analysts did not expect this sort of growth. If you look at the middle over here, these year-over-year growth rates are phenomenal. It's up 76%, after grew 101, after grew 141, after grew 78%. Like they're just on a streak of growth. And here's the analyst expectations. Every quarter they beat on revenue, they beat on net income. And that's why I think people are really starting to take SoFi serious. They're printing net income's at a record, revenue's at a record. Like that's good growth. So that's why I think people are starting to really like SoFi. And I think JP Morgan has a small stake in them too now. So cool little fintech name. And they're not even crazy expensive. They're finally at like a pretty attractive price to dollar cost average. I wouldn't go crazy yet, but they're at a 28 forward PE. The risk reward's starting to look really good because on the left, they're like pretty expensive 50 PE, but forward PE is a 28. So that's why I like SoFi here. I'd probably slightly nibble on SoFi. Like if I wanted this as 5% of my portfolio, I'd probably go ahead and make it 1% of my portfolio today, but I wouldn't finish that position. Like I'd keep it at small size position. So Raytheon stock, yeah. So someone said RXT. I'm thinking of RTX. We'll check out RXT too later. But yeah, Raytheon all-time high right now. They own Collins Aerospace, Raytheon, and they're at a 35 forward PE. So it's not nuts. And what I also like about this stock is the yield you get. So if you just buy the stock right now, even at all-time highs, they still have a 1.3% dividend yield. That's a pretty good yield, a 35 forward PE, a bit cheaper than its current PE. Yeah, Pratt & Whitney, Collins Aerospace, Raytheon, I love these businesses. The net income projections are phenomenal. It's supposed to go from 1.4 to 1.8. Like it's going to be a record in 2 quarters. So pretty good EPS projections. So margins are going up. Yeah, here's their net income. They're easily making close to $2 billion of real after tax. Yeah, that's before tax was 2.6, after tax was 1.7. They really are making close to $2 billion of net income a quarter. So that's what's cool about Raytheon. Let's actually see if there's any news. I'm sure there is, given all the government stuff. U.S. Navy approves Raytheon Stormbreaker smart weapon for the FA-18 Super Hornet operations. Like they just have the best stuff. I mean, they're so cool. All right, let's look at some more here. Looks like MAT will do much better since less tariffs could climb back to $22. Oh, Mattel. Let's check out Mattel. Oh, and then what up, Nate? We'll do Jack. Is it too late to enter? I forget what stock we were talking about. Oh, for SoFi? No, not for SoFi. Oh, and Axon. My bad, dude. Slayer. I'm such a fool. Yeah, Axon next is for sure. I promise. My bad, Slayer. I completely forgot, dude. Okay, so here's Mattel right here. This is that like toy company. Like they own the Barbie. I only remember this stock because I remember reading some about it when the Barbie movie came out a long time ago, and they collected a bunch of royalties and sold a bunch of like stuff from that. But the stock's been flat for a while. The stock is the same price that it was in 2021. Ooh, actually, if we zoom out, actually, so they're the same prices they were back in the year 1999. So historically, I don't know if this one's going to really outperform, the tech-heavy S&P 500, but they are cheap. But the growth is gone, it looks like. The current PE is a 14. The forward PE is higher at a 15. So that means the net income is supposed to go down. So let's see what the revenue growth is. So the revenue growth is like single digits, and sometimes it's negative. Like last quarter was down 6%, but the net income is all down year over year, every quarter. So that means margins are going down. So I can kind of see why the stock is struggling. I mean, it's not the end of the world because they're still making net income every quarter. If you average it out here, like they're still at a cheap 14 forward PE, but I can kind of see why they're at this 14 forward PE. I would just be careful for like the long-term perspective. I don't know what the long-term thesis is here. What's their net margin? What are they selling this stuff at? So you kind of, sometimes it's good. Yeah. All right. Yeah, I wish I had more positive stuff to say about Mattel. Didn't Cathie Wood buy shares of Figma? Ooh, I think Figma just went up a good bunch. Okay, let me do Axon right here. Then we'll do JAKK. What up, Nate, for sure. And some of these other companies. So here's Axon right here. This is a very cool stock. It's such a unique one. This is a body camera and software play, kind of cloud play. So basically, all the UK police force use Axon tasers and body cameras. They're also the number one drone defense play that exists, in my opinion. Number one drone defense play. Like so many police stations and royal families use their drone defense company. They bought D-Drone. It was one of the best drone plays. But anyway, their main business is they sell body cameras to police stations, and a lot of police stations now are mandating and forcing all their officers to wear a body camera. So they have a body camera on their body and in the car, and all that has to go to a cloud. So they also have the Axon cloud and stuff. So it's kind of a cool thing. Yeah, if we go to their connected devices right here, that's at a record of 23% year over year. And then their software and service business is up 41%. The software is the main winner here. But there is bad news, and I can see why Axon stock is struggling, and it's a profit problem. The top line is phenomenal. Like if we just zoom out on the revenue, that's what you want to see. Like that's so impressive. But the revenue's great, but here's the bad news. Look at the profits. It's actually the past 4 quarters in a row, they've actually made no money. I find that very weird. Like they've actually made no profits for the past 4 quarters in a row when they used to make a lot more profits. So something's happening to their margin. I don't know. And that's what I think you want to watch on this company. Why are they not making any profits? And that's why the forward PE looks so ridiculous. Yeah, forward PE is at 350 because their EPS is basically nothing because they're making no net income. But I still love the fundamentals here. I would love to own this one. But it's still like but because they have no net income, they're still expensive, even on this dip, all the way at a 35 bill market cap. So I'd love to own Axon just at a bit of a lower valuation. So what app? Yeah, this app I'm on is Moomoo, link in my bio, very first link there if you want to use my affiliate link. Yeah, if you want to get this app I'm on, my favorite app to buy stocks on, I have an affiliate link in the first link in the link tree in my bio. So JAKK is a toy company. Wait, another toy company? I know actually Hasbro is pretty decent. Hasbro, I think is close to an all-time high, or I don't remember. Dang, here's Jack's Pacific. Unfortunately, yeah, this stock as well is lower than it was in 1997. So it's not just Mattel that's doing bad. Oh, but dang, I didn't even realize they're up 24% on the day. So that's an incredible little rally. So congrats if you own this company. They surged on narrowing their losses, so they reported earnings and they lost less net income. Yeah, analysts expected them to lose 14 mil. They only lost 5 million. So pretty cool. And if we go to the revenue right here, so the revenue still fell, like the sales, the lifeblood of the company. The revenue fell 34% year over year. And the revenue's kind of, yeah, if we zoom out, the revenue's kind of been flat for a decade. So I can see why this stock has been struggling, but it did have, I guess, good earnings, but it's still losing money. Yeah, it's a tough one. Nothing's crazy blowing me away here, but I wonder what kind of toys they own. Toys/consumer products and costumes. Let's check out their website right here, jacks.com. Oh my goodness, they're trying to get all my cookies. Oh, so they kind of sell toys. Toys, yeah, okay. Kind of cool. I guess they got some Mario collabs or something. Okay, let's see. Shark Water. I bought one Weeble. Yo, shout out to the legend Aaron. I bought Weeble 1% of my portfolio. I think that's a proper allocation. Keep Weeble as a small position, super small percent, but still own it as that 1% because I think it's a nice, it's a way to get exposure to crypto. So Sharkwater said, check out SHLD ETF. So yeah, this is that aerospace and defense ETF. So if you don't know which aerospace and defense name to buy, if you're like, I don't know whether to buy GE Aerospace or Raytheon or BAE Systems or Rolls Royce, well, you can just buy this whole ETF right here. It breaks your money up for you into all the best defense names by market cap. So yeah, it is market cap weighted. So that's why Lockheed Martin and Raytheon are at the top because they have the highest market cap. And then, Rain Metal, then, actually, I don't know if it's market cap weighted, but then there's Palantir, Northrop Grumman, BAE Systems. So a lot of the best aerospace and defense names. Yeah, and I can see why this stock's at an all-time high. It's like a nice hedge. If the war fears keep escalating, the geopolitical tensions, it's a nice hedge to own those aerospace and defense names. Oh, yeah, I want to get to Celsius, too. That's my bad there, that one. So, yeah, Celsius right here. Dude, if anyone ever says a stock and then I just, forget about it, please don't feel like you're spamming if you want to re-say it, because I say I'm going to get to it, then I forget. I'm so sorry. So here's Celsius right here. I'm actually a big fan of their brands. They actually have a 24% US energy drink market share. So they own Alani now. So they just actually acquired Alani. So if you go to their cash from investing activities, they spent, you see last quarter, $1.3 billion buying Alani. So that's one of the reasons why their revenue has popped up so, dramatically, up 170% year over year. A lot of that was inorganic growth from the Alani acquisition, but Alani is a great brand, and they actually just moved their bottling to Pepsi. So Pepsi actually just took a stake. This is a whole story. Pepsi took a 7% stake in Celsius, and Pepsi gave them Rockstar Beverage, and Pepsi's going to distribute and bottle all their beverages for them. So they're moving their manufacturing of Alani to Pepsi. So anyway, it's just like a really cool beverage play. And here's their profits right here. So the revenues at a record, and so are the profits. This quarter, they made $166 million of profits, which is a record if you kind of zoom out there. And if we go to the analyst expectations here, it's expected to stay. Yeah, dang, they expected 129, they did 166, and it's supposed to stay at like $100 million a quarter. So they're almost with almost confidence they're going to be making close to, what do we want to call the net income? Probably they're going to be making yeah, that's pretty reasonable. $400 million of net income a year. So let me do 12.4 divided by 0.4 to give you my own forward PE here. So in my math, they're on a 31 forward PE. The analysts say they're at a 35 in the middle. They're at a 35 forward PE. So they're at around a 31 forward PE. So it's not even like crazy expensive. And another thing is Monster just hit an all-time high. All the beverage stocks are doing so good. This is Monster, just basic Monster energy drinks, all-time high. Crazy. And I actually own the bottler for Monster and Coca-Cola. So I actually own ticker symbol COKE, Coca-Cola Consolidated, also at a crazy all-time high today. They bottle for Monster and Coca-Cola and Keurig Dr. Pepper. All right. Thoughts on Novo Nordisk? Is it undervalued? So yeah, this is your weight loss play. There's a bit of a thesis issue over here. Oh yeah. What up, Jimmy? We'll go over Western Digital. I know that's a huge memory shortage beneficiary, kind of like a Micron. So this is Novo Nordisk. This is your weight loss play. So if you have heard of Ozempic and Wegovy, those are those two like weight loss prescriptions. This is the company that owns that. So they own Ozempic. Elon Musk is on Ozempic. If you check this out on the right or in the middle, pretty much all the revenue, 95% of the revenue is their diabetes and obesity care prescriptions, which is Ozempic and Wegovy. And they've had great results with their Wegovy pill. They put it on Amazon and it's done phenomenal. But there's a thesis issue, and that's their patent expirations and increased competition. So, Eli Lilly has Zepbound, and there's other like Medsera, some other weight loss prescriptions that are coming to the market. So, and Novo Nordisk is decreasing their prices of Ozempic. So there's so much news I have to say about Novo Nordisk. Basically, the future projections are lower than they are now. Like here's the revenue. It's going to go from 12.1 billion and it's expected to fall to 11.2 billion. So the revenue is supposed to fall. They lose their patents for the US and China in 2030, and they lose their Ozempic patent in the EU in 2028. So their patents are expiring soon, basically their exclusivity. So that's why I think they're trading around this 14 forward PE. The forward PE is actually higher than their current PE because the net income and the revenue are expected to fall in the future. So that's why the future multiple is higher. So sadly, very sadly, and I do like this one, but I wouldn't really buy it or keep it as a big size position because they're probably appropriately valued at like it really is should be like a 15 forward PE when they lose their patents and they agreed to cut the price of Ozempic by a bunch to get into Medicare and Medicaid and just to all consumers and the CEO was just saying the price cuts of Ozempic actually are helping or will hopefully stop people from buying knockoffs, and they'll just buy Ozempic. So anyway, it's kind of like a mixed bag. What do you think the thesis is there? Is a good thing. Are you seeing my messages? Yeah, what up, Kay? Good to see you, man. Sorry, I'm just so behind on the chat here. Sorry if I missed your stock or something. Let me do WTC real quick for the homie Jimmy. I don't have too much to say because it's kind of obvious. This is just your memory shortage play, and the future projections are up and to the right. And the reason this stock is at an all-time high is because of the future projections. Super easy. And look at what they've been reporting. So it's not like they're at an all-time high because of momentum meme. Like they're at an all-time high because the fundamentals are expected to continue to climb higher. Like this quarter, they expected 650 of net income. And look, the past 2 quarters in a row, massive beats on the analyst expectations because of this whole memory shortage issue. And we can just see the revenue. It was $3 billion this quarter. The next quarter is supposed to hit a new record. And then a new record the quarter after, the $3.5 billion. So I can see why this stock's at an all-time high. It's kind of like a smaller Micron. They have like something with SanDisk. So yeah, SanDisk equity or anyway, it's a memory shortage play. And if the memory shortage, so if Micron goes up and SanDisk go up, this one should just continue to go up more too. Do you do lessons on how to read and understand these charts? So no, I actually do not. So I don't sell anything. I have no course, book. I don't coach. I sell nothing. But if you want to learn, the only way to learn is really just to watch the streams. So if you want to support me, best way to support me is just watch the stream on YouTube or just subscribe. I stream every day, or I try to. We just look at stocks. None of this is financial advice, of course. So what's up? Hope all is well. Yo, you too, Mike. I hope you're having a great day. Happy Friday. So I saw WX say First Solar. This is actually or FSLR. This is my favorite solar stock. So if I wanted exposure to solar, I wouldn't buy Enphase. I would buy First Solar because they, to me, have the best fundamentals and like the cheapest valuation. Like they have way lower of a forward PE than all their competitors. So if you look on the right, the forward PE is in 11. So they're trading at 11 times next year's net income. Another one that I think this could easily stretch up to like a 13 or a 14 forward PE, send this up 30, 40%. And it wouldn't be that crazy. And check out the revenue growth. Just basic revenue is up 79%. After grew 11, after grew 27. Like it's just all green on the bottom. And they're not just printing revenue, but net income as well. If we zoom out, it's so consistent. They're easily making like 300 to 400 million of real after-tax net income a quarter. Great balance sheet. So that's what I love about First Solar. We can see the net income projections. It's supposed to be 560 million next quarter. It's supposed to go from 209 to 476. So there's going to be 100% EPS growth still. 11 forward PE. I mean, they're cheap even at this high level. I mean, they're my favorite solar pick if I had to pick one. So let's see here. Yo, we just covered. Yo, my bad, Nate. We just covered Light stock like 10 minutes ago. But if you wait a minute, we'll definitely come back and check them out. When did Celsius buy that company? It was last quarter, or that's when it was in the cash from investing activities, like 6 months ago, probably. Yeah, Celsius bought Alani. And Celsius now owns Rockstar Beverage, which is Pepsi used to own them. Dang, look at Salesforce right here. So Salesforce is near a 52-week low. Looney said, do you think it's on sale or crashing? Well, it's on a sale and it's crashing. So Salesforce, just because of the whole software thesis, like of AI replacing software and stuff, Wedbush Ives calls Salesforce a historic buy amid the AI disruption concerns. So Salesforce employee petitions CEO to distance the company after ICE and AI technology leak. Yeah, dude, don't go on X and look up the Salesforce CEO. He's in some heat right now. Like he was like bragging about how he was helping out ICE and stuff. And there was like this leak. And anyway, that all aside, Salesforce, the company, their valuation is pretty cheap on the right. It's a 24. It's the same as their current valuation. They trade at 24 times net income. This is the cheapest Salesforce has ever been at. And they're very diversified. I love some of their software like Slack. You know, a lot of the S&P 500 uses Slack for their employees, like Amazon. Big customer of Slack. Amazon uses Slack for their employees, and this is up 19%, after grew 9, after grew 10, after grew 55. So they're on a streak of growth for Slack. And I like that it's 19% growth this quarter. That was great. But yeah, very diversified, services, sales, Slack, integration, marketing, analytics. So if we go to their bottom line right here, they're actually at a record net income. On the right, they did 2.09 billion in net income, which was a record. So we're at a thing where Salesforce is actually beating or, meeting their earnings expectations, but they're falling because of the thesis. And that's why I wouldn't have Salesforce as a big size position, but I probably like the risk to reward, especially now, looks pretty decent to like have it as a super small position, but you keep it as a super small position because we don't know what's going to happen with the software AI sell off. Like you buy a little bit and you do not buy any more unless it falls another 10% or something like that, where you kind of do it in blocks. And if in some scenario, I think we're probably, not financial advisor, I think we're pretty close to the bottom on Salesforce. I mean, I could not see Salesforce going into like a teen multiple unless like AI really, really does and Claude Code is just so good. But I think it's like really just happening too soon. Yeah. So George said TNDM stock. I prefer ServiceNow over Salesforce. Yeah, ServiceNow is a great software name as well. Did you hear Anthropic announce Anthropic Defender for cybersecurity? Yo, I did see that, Mongo. We were talking about that earlier. We were watching CrowdStrike. CrowdStrike fell 6% as soon as that news dropped. Oh, and it's back down 6%. We watched it. So like it announced right at this time, and then they tanked within 5 minutes, 6%. They rallied a little bit, but dang, now they're back down 6%. So yeah, basically Claude, which is Anthropic, is making some cybersecurity. It's just new competition. Who knows? But that's actually, I love cybersecurity. Cybersecurity is one of my favorite industries to buy right now. So here's some diabetes care companies. So if you look in the top right, they're only worth 1.7 billion. I don't know. This might be obvious, but I have no clue. But if weight loss prescriptions are popular now, will diabetes go down in the future? I don't know the long-term thesis if people are on weight loss stuff. But okay, let's look at their numbers. So supplies and so they sell like the pump and stuff. Okay, the pump revenue is actually down 4% year over year, but their other business, supplies and others, is up by 8%. So it's like they're up 35%. So they must have reported earnings. So what these earnings we just looked at right there, that doesn't include what they just reported. Oh yeah, so this is Q3, here's Q4. So here's what they just reported. This is the updated numbers. Okay. They reported 290 and analysts expected 277. So they beat on revenue. They expected to lose 5 mil. They only lost 500K. So it was a great beat. They beat on revenue and on net income. So that actually, I can see why they're up 35%. Good little beat on earnings there. Nice. Congrats if you own them. Hood, please. Oh, and T1 Energy. Oh, wait, what is T1 Energy? Okay, let's do that one real quick. What's up? And then we'll do a Hood. We'll do, and Fortinet. Yo, Fortinet, that's one of my favorite cybersecurity plays. Nathan, did Pepsi cancel that deal? I don't believe so, no. Pepsi is definitely doing that deal. You should look it up. I think, Pepsi is doing that Celsius deal, and it's already happened, basically. It's for sure happened. So here's T1 Energy stock. Let's check it out. You know, energy's a lot in demand. I wonder if this is some alternative energy company, but real quick, have to show this. Shout out to the legend Craig on the YouTube stream with the $1.99 super chat. Dude, hope you're having a great Friday. We'll definitely check out RVMD after this one. Thanks so much for the super chat. You just made my day. Thank you. So let's see what this company does. TE, they do manufacturing and subsequent sale of photovoltaic solar modules. Okay, so this might be a solar play. Let's actually check out their website just to verify. Okay, so yeah, it looks like some sort of is building domestic solar and battery supply chain. So maybe they manufacture the solar panels and the modules. So kind of cool. All right, let's see what their actual numbers are because that's what matters. So revenue is great. Wow. So this same time last year, they had no revenue or 3 mil of revenue. But just this quarter, they did 210 million. Let's see, what are the analysts expecting on that? And whoa, it's supposed to go to 370 and then 240 million. So the revenue is going to go from 64 mil to 240. That's an incredible year-over-year growth rate. But the net income did miss. They expected to lose 26 mil, but they lost 140. That was probably a one-time adjustment though. But next quarter, they're actually supposed to make net income. If the analysts are right, yeah, they're supposed to make EPS and make net income next quarter. So some sort of a Trina Solar Company is the largest shareholder. Anyway, some sort of solar play with good top-line growth, but we're just watching the profits eating in. They're just now getting net income positive, so the profits don't really matter right now. So as long as they keep beating these expectations, stock will probably continue to go higher, but I just keep the allocation that one low. So again, shout out Craig. He said RVMD. Then we'll get back to it. Then we'll do Robinhood. What's up, Eddie? Remind me to get to Robinhood. I definitely don't want to miss that one. What's the latest stock you bought? Well, technically, I bought I bought a few shares of Cormetics and Robinhood today, and that's my most recent. So here's RVMD. Thanks again, Craig. This is Revolution Medicine. They had a great gap up. So there was no earnings report this day, and the stock gapped up. So if I had to guess, they maybe got some FDA approval on a product. Phase 3 trials were a success, something like that. So I'm guessing if we go to the revenue, maybe they have no revenue currently. So yeah, they have no revenue. This is from 2023. So if we go to 2025, they have no revenue. So this company right now currently has no sales. They don't sell anything, but they should be making money very soon because analysts project them to make 4 million next quarter and then 3 million. So, yeah, dang. Okay. That's not great. Here's their net income. This is actually a lot. They lose 2 to 300 million of net income a quarter. So these are the net income losses, record net income losses. So that's why the leverage is kind of going up and up and up. But that actually scares me. I don't like that they lose all this net income and they don't have any revenue right now, but they must have had some good results. So it's like a future story you're kind of buying. So that's why I just be careful, because it's a lot of future uncertainty. Whoa, they're worth $19 billion. I didn't realize they're that huge. Maybe this is a weight loss company. I don't know. Let's see if we can find some more. Biotech company. Clinical stage oncology company. Yeah, oncology is growing. So some sort of oncology business. So we're really waiting for some sort of future. I wish I could give you thoughts on them, but they have no revenue or for really any metrics for me to look at. So hopefully that was kind of helpful there. So someone said FTNT. Oh no, let me do Robinhood. So actually, I have a good thesis on Robinhood. I am a shareholder, so I might be biased here, but I love Robinhood, the stock. They're like the picks and shovels fintech play, because every time and they just reported total platform assets are 324 billion assets with Robinhood, which is just nuts. And they launch a 1 billion close-end fund IPO or pre-IPO SpaceX, Stripe, and Databricks, some of these other companies. Robinhood acquires majority stake in MIAXD Derivatives Exchange to enter prediction market in derivative trading. That's what I love about Robinhood, is specifically the growth of their prediction market contracts. So if we go, and I love this data we get here, check this out, events contract traded. This is month by month data we get. They created this in 8/2025. In that month, they did 300 million contracts traded. Just in December, they did 2.9 billion. And these are the high margin contracts where they collect 2% of every single prediction market contract. And they obviously collect a lot of money from option contracts and also crypto. This is the one reason why the stock fell on earnings. One of the reasons why Robinhood fell on earnings, because their crypto revenue actually fell 30%. So we're in a scenario where their crypto revenue fell 30, but their event contracts were at a record, and that's where the highest margin revenue comes from. You won't believe their profits. This is another crazy thing. The revenue this quarter was 1.28 billion. On this 1.28 billion of revenue, they netted and kept after tax 605 million. That's after they paid 50 mil of taxes. So, and it says down 33%. Last year they had a one-time adjustment. They didn't actually make 900 mil this quarter. So basically just look at the before tax number. Insane 47% net margin this quarter. I cannot believe how good it is. These brokerages print money. Food2, Interactive Brokerages, Robinhood, Webull, hopefully soon. They just have such crazy margins, the picks and shovels play. And Robinhood's really pushing the prediction market contracts. I did one on the Super Bowl. That's the only prediction contract I've done. So, and I won. I bet on the Seahawks. I won like $8 doing it. But yeah. I'm not a big fan of doing their prediction market contracts, because it's basically flipping a coin. It's not investing. Prediction market contracts is not really investing. But let's do FTNT. Ooh, and then my bad there. Did you see we'll look at PD stock. Thanks for the Axon analysis. Yeah, no problem there, Fisher. I appreciate you. What up, Remco? Maybe a less discussed name, PAC. Ooh, we'll do PAC. You have a company with share price appreciation when the underlying business is destroying value. Or you were talking about that healthcare stock. Yeah, that's why that healthcare stock was. I don't love that healthcare stock. Actually, sadly, I'll just RVMD. I probably would not own them. But I don't know that, like, 19 bill market cap is crazy. Here's one I would own though. How long are you doing these lives? I try to stream every day. We'll probably be live for another 30 minutes if you want to stick around. My TikTok stream's already cooked after I promoted my YouTube channel and Moomoo. So we already lost For You page eligibility on the TikTok stream. But oh well, appreciate everyone watching both streams. I'm reading both the YouTube and the TikTok chat. But anyway, here's Fortinet. This is my favorite cybersecurity. Well, actually, probably not my favorite cybersecurity play, but top 3 favorite. This is a subscription cybersecurity play. And if we go to this is what you want to see if you're just going to diamond hand a stock. There's subscription revenue, which is all reoccurring. Analysts love this. It's ARR. It's up 13% after grew 21, after grew 35, after grew 25. So they're just on a streak of growth. And not just their security revenue, but the product revenue, that's up 18%. Technical support's up 13%. So all their businesses are growing great. Like, let's just zoom out on the revenue. Like, this is what you want to see. It's not just the revenue that's growing phenomenally, but the net income too. Actually, you should really look at the operating profit because they had a slight adjustment. They're the most profitable they've ever been. They're making easily 5 to 600 million in net income a quarter. I believe that cybersecurity will be more immune to this software sell-off. I mean, they're still part of the software sell-off, but I'm really a believer of cybersecurity because as AI gets better, hackers will utilize AI and get better at hacking, and the demand for cybersecurity should only go up. And this is a great one. Like right now, their net income is easily 500 million in net income a quarter. So and the free cash flow is even better. They're doing 500 plus mil free cash flow a quarter. And what's the forward PE? A 31 forward PE might be a little expensive, but not for cyber. Like, I'm just a big fan of this stock. US is only 30% of the revenue, so like an international play too. Let's see if there's any recent news. I know there's that Claude, so they're probably down in the day. Yeah, just like CrowdStrike from the Claude cybersecurity news, but oh well. Let me go to PD real quick. PD stock, PagerDuty. Oh yeah, this company, dang, new 52-week low on PagerDuty. I don't know too much about this company, but RIP this stock. Yeah, actually all-time low on this company. Another one that's kind of being hurt, I guess, by the AI thesis. They did miss on their earnings this quarter. They missed on their revenue just by $1 million, so it wasn't a big deal. Yeah, so look at that. The revenue is actually slowing down. It's kind of mid to low single digits. You know, the revenue's only up 4.7. Last quarter's only up 6%, but they are profitable. Like if we zoom out, like this is a scenario where PagerDuty, they used to lose money for all of eternity, so it was a tough buy. But now we're in a scenario where they're actually going to be making profits and making EPS potentially for the rest of time. But who knows about the actual moat of this company? Looks like the revenue growth is slowing. Next level incident management powered by AI. So AI platform for critical work, so automation, so some sort of software name, PagerDuty. Got to do more research on them. All right, let's see. Can you please do BATO? All right, let's do BATO. I've never heard of this one either. So this is Bat Lion Oil. Okay, so we're not really going to cover this one because if you look in the top right, they're only worth 70 million. You know, that's just such a small market cap where it's just a tough buy. But oil and natural gas, what's the revenue? So yeah, the revenue, well, this is kind of normal for an oil and stock right now, but the revenue's down 4% after it fell 16, after it fell 45, after it fell 9%. So the fundamentals don't look too great, but it's not just a them problem because the price of oil has been struggling. So yeah, they have no problem. Like the profits are barely, like they're barely break even. I mean, they lost 20 mil this quarter. So technically for the past 4 quarters or the past year, they've lost net income. It's a micro cap. Yeah, I'd just be so careful. I would kind of just not touch this one. The revenue, it's just, I'd rather, out of all the oil and natural gas plays, if I wanted to buy one, I would pick a more quality one. I'd pick like a Constellation Energy as a natural gas play. That's a great one. Or even like a Williams, a W&B, and you get good yields with this one. I don't think that company paid a dividend, but like a Williams. Wow, I didn't realize this one's at a crazy all-time high right now. And they still have a decent, even at all-time highs, you still get like a 3% yield. Pretty cool. Why is Hood so down from all-time high? Well, probably just following crypto, but I think it's way, I think Robinhood's way oversold. Snap calls doing well. So is that Snapchat? So dang. Yeah, I've not really ever been a fan of Snapchat the stock. The shareholders get no voting rights. The insiders, the reason they lose net income every quarter is because of the stock-based comp that insiders take. It's almost like an exact correlation. Oh, wow. So they actually made net income. That's the first time they've really ever made net income, like on a real consistent basis. Yeah. Basically the first time ever they've made net income. So they made 45 mil in net income. Let's see what the analysts project next quarter. So they're expected to lose 140 and then 180. So I guess the net income losses are supposed to narrow. So that's good. I know a lot of people are kind of boycotting Snapchat because they're making you pay for your memories, basically pay for your photos that you have saved all this time. But here's a cool metric we get on Snapchat. This is their, what's this? Their active users, daily active users are 474 million. So that's a lot of daily active users. 57% of the revenue comes from the US. But this one, you're really just watching the profits. Just because if we zoom out, you know, kind of for all of eternity, Snapchat just loses a bunch of money every quarter. But it finally looks like they are starting to lose less and less net income. But it's still a lot. Like they're still expected to lose a lot more, but maybe the maybe they'll get a lot more revenue from the subscription. It's not the worst, but I just am staying away from it. Oh, sorry. Check this out, actually. Snap direct revenue business reaches over 1 billion annualized run rate with over 25 million subscribers. Snap launches creator subscription program with pricing between $5 and $20 a month. Creator subscription. You can, like, I guess maybe subscribe to a creator. I don't even know. But there you go. There's Snapchat. All right. What's up next? Oh, MCK stock. Yeah. So Merck. Oh, this is McKesson. Oh, this is that like medical delivery company. So it's like a low margin business, or what's their net margin again? So yeah, so look at this. Here's their net margin. If you kind of zoom out, they're like lucky to have a 1% net margin. So look at this. This is the crazy part. The revenue they do is 106 billion. So on this 106 bill of revenue, they netted in net income 1.25 billion. But that's all they need. Like they print easily like $1 billion of net income a quarter, which is great. So that means if we do a multiple price to net income on a forward basis too, they're at a 23 forward PE. So McKesson's actually not that expensive. So yeah, North America Pharmaceutical. Let me actually see. Medical distribution. Yeah, they have a bunch of different businesses, but yeah, it's a $114 billion company. And even though this is what's crazy, even though the stock is at an all-time high, pretty much all-time high, they're still only at a 23 forward PE. I really feel like that could stretch up to like a 28 forward PE or something. And it's really not crazy expensive. So yeah. Um Philip said EOSE stock, and then Chevron, that's a cool one. Have you ever checked out Zeta? We have checked out Zeta. Do you want me to go over that one? Actually, I might do that one later. We'll look at a few more here. So yeah, we'll do EOS, Chevron. What up, Toast? Or I mean, have fun. He said Toast stock. We'll do Toast and GD, PAC. Dang, I'm a little behind. What's up, Dylan? We'll do GD. So here's EOS Energy. Let's see. Dang, they're down 6% today. Let's see what they do. So, product revenue. What are the products they sell? Electrical equipment and parts. Designs, manufactures, and deploys battery storage solutions in the electric industry. So, they do batteries. Maybe they're like some energy storage architecture company manufactured in the US. Okay, so they do energy storage and batteries. Let's see what their margin is, so they are running, so they're not making any money right now. They have great growth. Like, wow, that's a record revenue. It's never even been close to this before. So that's actually the metric you pay attention to. They did 30 mil of revenue. What are analysts expecting? Whoa. Next quarter, it's supposed to go to 100 million nearly. That's actually insane. So they're going to be doing nearly 400 million in revenue a year. So that's why the stock has had kind of so much momentum since like a year ago, because the revenue is literally going to go from nothing to now 90 million a quarter. So what are the net income losses? So yeah, dang, these are big net income losses. I actually almost don't believe it. It says they lost 640 million, 200 million, 200 million, 300 million. So that's a lot of net income losses. And when you lose net income, that money has to come from somewhere. So look at the balance sheet. That's not their assets. That's their liabilities going up. So they have no assets pretty much. Like they have 10x the liabilities as they have assets. So that's a lot of debt to pay. They just issued a bill of debt. I actually am not a bit, like they have the growth, but I don't love the fund, like these like there's almost like bankruptcy risk here. Like that's a huge those are crazy net income losses, but the revenue growth that's going to happen is crazy too. So it's a mixed bag. Let me do Chevron, then we'll do Toast. Yeah. So Chevron, actually, that's a big Buffett play. If we go to the Warren Buffett portfolio right here, he's a super investor, has to make all his stocks public. Chevron is 8.7% of his portfolio. He owns a lot of the high yielding names like a Coca-Cola, Bank of America, Chevron. So yeah, the oil gas station plays have done really good after the Venezuela oil price of oil going up. So let's see if there's any specific news. Probably not. Berkshire Hathaway increases Chevron's stake by over 7%. So they're actually buying more Chevron shares. This is a great dividend play because even if you buy the stock right now, you pretty much get 4% of your money back just in a qualified dividend every year. So you get 4% of your money back in a qualified dividend. Again, you don't buy Chevron to really outperform the tech-heavy S&P 500, but you buy Chevron for the defense of oil. You keep it as a small percent of your portfolio, but you just collect a nice qualified dividends in the meantime. And, there's this huge software tech sell-off that's happened the past month. Well, look at Chevron the past month. That's either a defense name, they do good in kind of these like bad environments, where Chevron's just been up and to the right, plus the dividend. So not too shabby. Congrats if you own that one. I don't think I'd buy it at all-time highs today, but it's not one I'd sell if I was a shareholder. What does forward PE mean? So forward PE is basically the price to next year's net income. So like Toast right here, they have a 33 forward PE. So that means they trade at 33 times next year's net income. So yeah, Toast, this one I love, but I think they're just being hurt because of their customers are being hurt right now. So their customers are all restaurants, small, medium-sized restaurants. If you've heard of Toast before, they do the point of sale system, that little device that says, hey, would you like to, when you go to the food truck and you see the little weird looking iPad that's like, would you like to leave a tip? 50, 100%, 120% tip or custom, they make those machines. I actually want to pull up their website, but that's the wrong link. So I don't think I can actually pull up their website right here. But anyway, they make all the little gadgets for restaurants and stuff. So they're at a 33 forward PE, which is the cheapest they've ever been at. Like, this is what's incredible. If we go to the revenue, this is what you want to see. Just incredible, like record revenue every quarter, every year. And it's not just the revenue that's hitting a record every quarter, but the net income too. So they used to lose money every quarter. You couldn't really buy the stock, but now Toast makes good money, over 100 million of real net income a quarter. Are those beating expectations? Yeah, check that out. That's why Toast is just being caught in the software sell-off, and they're not selling off because they're missing all their fundamentals. No, they beat on revenue, and check out the net income beats. So they're beating like crazy on net income. They expected 72 mil. They did 101 mil. So great beats on the profits too. So yeah, 33 forward PE, that's actually really fair for Toast. I really like this name. What I see about Reddit is in a much better position. Um, yeah, the Snapchat ads are not good. Reddit is a way stickier of an app. Plus, they can sell I really like Reddit because they are selling their data to like train LLMs. I don't know exactly if Google uses it anymore, but like that they were using Reddit answers and stuff. But yeah, Reddit is known as one of like the last real places on the internet, and Reddit stock is cheap. I actually made a full video, or well, not a full video, but my very most recent YouTube video, the very first stock I go over, I went over Reddit because I think they're one of the best buys right now. On my own math, they're at a 28 forward PE, and it's even slightly cheaper when you do an X cash PE multiple. So Reddit has 98% gross margins. Like, they just like crazy. I'm very bullish on robotics for the coming years. Any recommendations? So actually, my favorite robotics play, it's going to sound dumb, but it's just Amazon. That's the number one robotics play. But the second best robotics play, if I had to pick one, would be a Symbotic. So the best robotics plays right now are like the warehouse robotics companies, because that's where it's most useful for right now. Not like the humanoid robotics, but like the warehouse robotic systems that help out warehouses in logistic times and all that. That's what Symbiotic does too, same with Amazon. But they help out Walmart. And this is the crazy part. They have crazy revenue. They have over 1,500 patents. Walmart loves this customer. Walmart is their largest customer, and Walmart loves Symbiotic so much that Walmart decided to buy them. Walmart owns 12% of all the shares of Symbiotic, and check out the revenue growth. This is what you want to see for a robotics name. I see a lot of these other kind of crappy robotics names, kind of startups like a Rich Tech Robotics. Like, I want to own this one that already has 600 mil of revenue a quarter, growing like crazy with an NVIDIA, like with the best partnerships. I want to show you some of their like robots. Yeah, like they just do all the logistics for you. It's like really cool. So yeah, check out their investor presentation. I've actually made a YouTube video on this one before if you want to check that out. But yeah, cool little robotics play. 1,500 patents. Cool one. And they're just now getting profitable. Okay. What should we go over next? How about, oh wait, Anthony said WDAY. Is that Workday? And they're like a Salesforce as well. Yikes, they're the same price as they were back in 2018. So the stock has fallen very hard, just like Salesforce, Adobe, and ServiceNow. And they're at a 31 forward PE. So they're a subscription model company. I do like subscription model companies because it's all like reoccurring revenue. And check it out. It looks great. It's up 15%, after grew 15, after grew 18, after grew 23. So subscription revenue growth looks great. US is most of the revenue, and they're beating on expectations. Like they beat on revenue, they beat on net income. Oh, so they're already net income positive. Yeah, that's what you want to see. That's so consistent, literally record every quarter, and not just the revenue, but now, actually, we should look at the operating profit. The profits are, the net income is at a record. I mean, just incredible. They're doing around like 200. Well, at this growth rate, yeah, they're going to be making like 200 mil of profits a quarter, 200 mil of net income a quarter. So they're just being collected in the software sell-off. Actually, this one looks great. I love subscription model companies. Let me actually see if there's any news. Workday co-founder returns as CEO. Oh, that's cool. Well, cool. Actually, their numbers look great. I love it. I didn't know they were a subscription play. Oh, yeah, let's look at PD real quick. Oh, yeah, we did look at PD. Yeah, we looked at that one already, Michael, when you said it the first time. Yes, sir. That one looked interesting as well. They're also another one that's like just now having their first ever profits. Hey, what up, Mason? What does the percentile mean for PE? I don't know what you mean, the percentile. PE ratio. Basically, the forward PE on the right. Oh, you're talking about, in the middle there. Actually, you know what? That I don't know. That's what you mean in the middle there. Percentile. You know, I should know. I honestly, I didn't even know that was there till you just said that. I have never even paid attention to that. I think this might mean their historic percentile. Are they trading 18% above their? I don't know. Good question there, Matt. Okay, Wesley. I used to own Supermicro. I actually just fully sold out of Supermicro. I don't like what's happening with their margins. Like their revenues and stuff is growing, but it's the reason Supermicro stock isn't going up is because of the margin compression. Their margins are going down, and I'll just show you that. Here's their basic gross margin. Gross margin fell 46%. Last quarter, it fell 30, fell 7, 38, 28, and it fell 46. After it fell 24, after it fell 11. So, and it's not just the gross margin, but the net margin. Net margin's only at 3%, down 44, after it fell 30, after it fell 17. So it's a margin compression issue. Like the revenue's still growing, but they're giving customers these bulk deals where the profits, like look, the revenue looks great. The revenue's up 120%. So revenue's crazy, up 120. But how come the profits, the net income is only up 24? It should be up 100% as well. It's because the margins are crashing. So that's what you want to watch for Supermicro. They kind of just do that. The margin's so low because they just do a commodity, and Dell's getting into their space. They just install your servers for you, your GPUs into your data center. So that's Supermicro. I was kind of bearish on that one, but I don't own them anymore. No way, dude. I can't believe it. Shout out to the legend Travis on the YouTube stream with the super chat. He says, how well do you think the semiconductor industry will perform going forward, given the insane growth already? That's the crazy thing. I think there's still a lot more upside in a lot of these semiconductor names. Some stocks individually are expensive and I wouldn't buy. But like when I just look at like the top semi names like NVIDIA and AMD and Micron, if we just look on the right, like the forward PEs and all these companies look very fair. Like I think NVIDIA, like even though the market cap's already huge, I think if you even just buy a boring NVIDIA right now today, I still think you'll get S&P 500 type returns for the rest of the time. You should get 8 to 10% of your money back just even with the boring NVIDIA because of these net income projections, like the net income. And we'll talk about some other names in a second here, but NVIDIA this quarter made a record net income. Like this is crazy. 31 billion of net income this quarter. It's never been higher. 31 billion in net income. Well, next quarter, it's going to be 35 billion and then 38 billion. So there's still growth that's going to come to these names, in my opinion. So that's why I really think a lot of the semi names are cheap. And if we just go to the main semiconductor ETF right here, the SMH, which is like a great ETF where if you're like, I don't know which semiconductor name to buy. Do I buy NVIDIA or AMD or the Micron shortage or the lithography place like ASML? Or the fab like Taiwan Semi. NVIDIA designs the chips. Taiwan Semi actually makes them. Even Taiwan Semi, They're so cheap, even at all-time highs, at a 26 forward PE, even at all-time highs. NVIDIA's at a 26, Taiwan's at a 26, Micron's at a 10. Honestly, a lot of the semi names aren't crazy expensive. And even though it's not like I certainly would not buy this ETF right now, but it's like you put it on the watch list for the next time, like the semiconductor names sell off. You could buy this ETF or buy some individual names like an NVIDIA, Taiwan. I own AMD stock, a little bit of them. Yeah, I got 10 shares of AMD. Dang, they're down on the day. But yeah, thanks again, Travis. If you have another stock you want me to look at, please let me know. I really do appreciate you. If you have a certain semiconductor name you want me to look at. But yeah, AMD, NVIDIA, Taiwan Semi, a lot of these names just aren't expensive. And I feel like they could still go up a good bit. Ooh, I forgot to get to this one for you. What was it? RXT. Let me get to RXT right here. Yeah, thanks again, Travis. Thanks again for the huge super chat. I really appreciate you. What up, Joe? Have I missed Bull? Yo, we already looked at Webull, but I'll go over it again, and I want to get to PAC too. So here's Rackspace Technology. They're up 40%. They must be like an aerospace play. So let's see if there's any news here. Well, there's definitely some sort of news, right? Rackspace surges another 50% on Palantir AI partnership hype. So, okay, that's what it was. They actually had a partnership with Palantir. So they're a public cloud and private cloud company. So they're a cloud play. Huh, I like AWS and Google as my cloud plays, but I guess they're partnering. So I can see why, but before today, the stock has been just terrible. It was basically at an all-time low before this little rally, and I can see why. Because if you go to the revenue, it's kind of just been declining for all of time. Revenue's down, 1%, after it fell 7%, after it fell another 7%. So the sales, the lifeblood, the revenue of the company just isn't growing. And what about the net income? And so even worse, they're adding losses every quarter. So they're losing 50 mil a quarter plus. So yeah, they're highly leveraged. They have a lot more liabilities than assets. But yeah, there is momentum today, I guess, on the Palantir partnership. But I don't. I can see why this one was at an all-time low today. I just don't know if this Palantir partnership makes me just want to buy this company now. I just don't think so. But but that doesn't mean the stock still won't do good. But I just keep the allocation of that one probably low. But that's super interesting. What do you think about the ETF BOTZ? Let me check out this one really quickly. Then we'll do PAC. Ooh, FICO, please. What up, Deborah? Yeah, we'll do or Deborah. We'll do FICO. So here's BOTZ. This is the Global Robotics and Artificial Intelligence ETF. So, oh no, hold up. They're saying I'm AFK. See, TikTok is... Okay. Sorry if it lagged out for a second. TikTok made me fill out a CAPTCHA thinking I'm AFK. So BOTZ, some robotics AI ETF. Let's see what it holds though. So yeah, obviously NVIDIA is the great, picks and shovels play. And then ABB, I like ABB. And then I've not heard of a lot of these names. ISRG, that's a great medical robotics company. Phenomenal play, no debt there. But I've never heard of like Keyence. I don't want to try and pronounce that. SMC, Cognix, Rainbow Robotics, ordinary shares. So, some names I've not heard of before, but it's a cool ETF. It hasn't outperformed the S&P 500 though. So let me do PAC, then we'll get to FICO. So here's Pacific Airports. So is this really I've heard of this one. Yeah, this is an airport play, and these airports are making record profits. Every time you go to the airport, everything's like 1 trillion times more expensive in the airport than like right outside the airport. Like the Starbucks in there, the coffee's always way more. So let's see, aeronautical services. Well, let me just go to the revenue down here because that's what I want to see. This is surprising for, a boring airport. Oh, first off, this is a Mexico company. So where's she going to convert the currency to USD to US dollars just to get a bit of a better idea here? So USD converted, that actually changes the growth rate. The revenue is up 25%. So let's actually zoom out here. So here's the before COVID. So before COVID, the revenue was like 240 mil a quarter. Now it's significantly higher. And let's see about the net income too. So the net income is too. So before COVID, they were making like 60 mil a quarter. Now they're making like 150 mil in net income a quarter. So they are making consistent profits. Yeah, they really are easily making like 140, 150 million of net income a quarter. So let's see what the forward PE is. I think they're really cheap, even at their current prices. And my internet just like bugged out. So the stream's lagging. Uh-oh. Sorry if it's lagging. My thing's saying that we're the bit rate is really low right now. So well, we were close to the end of the stream anyway. If it doesn't, it says we're good now. Okay, if it doesn't fix, then we'll end the stream. But it says it's fully back now. So sorry if it lagged for a second. We're back. But yeah, here's Pacific Airport. Their current PE is a 25, but the forward PE is a 19. So they're only trading at a 19 forward PE. So I'm actually a huge fan of the airport plays over actual airlines. And there's no way I'm going to be able to find it because it was kind of a while ago when I added them to my watch list. I think it's CAAP maybe. So we just saw that was a Mexico airport. I believe this is the America airport. Yeah, Corporation America Airport. Oh, they also might be Mexico though. Hold on here, CAAP. I was just looking into these because they were fascinating me. I couldn't believe how good these just boring airport stocks were doing. Went from $2 to $30, and it's because they're printing net income. So there's CAAP, and I think the other one was like OMAB. Yeah, OMAB right here. Crazy all-time high on these boring airport names. Okay, enough of the airports. Hey, thanks again, Travis. Appreciate you. So that was Pacific Airport. Egg Mayo says, have you done Google? I actually have not done Google. Should we look at Google? And hey, thanks again, Nick. I do appreciate that. Hey, what's up, Wesley? Good to see you. Remind me, Nick, can you give me the ticker symbol for IDEX again? I forgot that one. I do appreciate that. So actually, if you're still here, Egg Mayo, let me know. I'll actually go over Google too. I saw Han, he said Vertiv. FICO. I forgot about FICO. We'll do FICO, then we'll do Vertiv, and then we'll do Google. All right, bet. So here's FICO. One reason why the stock gapped down on these days right here, like it just randomly fell out of nowhere, like no earnings report on these days, they just randomly fell. It's actually because they have a pretty much monopoly on the credit score business. Whenever you buy a car, a house, they look at your FICO score and you pay like $1 or $2 for the FICO score in the total price of something. But there's now the government's making like their own scoring business as like just brand new competition for FICO. And that's why the stock has struggled, because there's just new competition that just came out of nowhere, not expected. But I do like this on the right. The forward PE is the 34. I do love the business model. So they have this scores business and they've had phenomenal pricing power, because whenever you buy a car, a house, you're only paying a couple of dollars for your FICO score. So they've had tremendous pricing power to raise the price of the FICO score to like $5 and $8. And no one cares because you're buying a house for a couple $100,000. So it doesn't matter. What they did at the very beginning was they got their score business into the ecosystem, basically like doing this stuff for free. And then they just upped the price. And that's kind of where their moat came from. It was pretty cool. And the expectations are great too. Net income beat for the past 3 quarters in a row, and it's supposed to go to 240 million. That'll be $1 billion of net income and annualized. And they're at a 31 bill market cap. So yeah, that's why they're at like a 31 or a 34 times next year's net income. But I'm a fan of FICO. But you do just want to watch how their moat potentially is being affected by the new FICO score. Let me see if Morningstar actually covers that in their bear thesis. Let's see. FICO trades a large premium to the credit bureaus. Market leading position and pricing actions may result in antitrust scrutiny. Yeah. Oh yeah, Vantage score from the government. Anyway, I don't know. Hopefully that was kind of helpful there on FICO. I still am a big fan of them, but they're not super cheap yet. They're not extremely cheap. Let's do Google real quickly. So Google, this is a great one. Then we'll do Vertiv. But they're up 4% on the day. They actually own a lot of SpaceX. They own 7.5% of SpaceX, which is trying to IPO at like a 1.5 trillion valuation. They're actually a big shareholder of Anthropic, which they're worth like 400 billion. They own like 14% of them. They have so many investments that have just done great. They have some of the best investments in history. Like their investment in SpaceX, they're up over like 100x on them. They're up over 100x on their original YouTube investment. They bought YouTube for like $1.5 billion total. It was like $1 billion, but then they had to pay a little like 500 million more. They paid like 1.5 billion for YouTube. Now YouTube makes like 20 billion of like revenue a quarter. Like it's just nuts. But Google announces $15 billion investment in India AI infrastructure. Google upgrades Gemini 3 deep think model. Waymo considers $2.5 billion deal with Hyundai for 50,000 IONQ5 robo-taxis by 2028. So that's actually pretty cool. You know, Google's an ETF in one. They own YouTube, Android, Waymo, Google TPUs, the Google Cloud, quantum chips, TPUs. And on the right, like, this is why Google isn't expensive even after this crazy rally that they've had. They're at a 27 forward PE, which are trading at 27 times forward net income, next year's net income. That's so cheap. And here's the Google Cloud. The Google Cloud growth has been so good. It's up 47% year over year to $17.6 billion. Just phenomenal. And here's the net income. You can't make it up. Google just prints money. 25 to 30 bill of net income a quarter after tax. And one thing being questioned on Google is how much they're spending. They spent 51 billion this quarter, more than they're making, and they actually just guided for the next 4 quarters in a row to spend 50 billion for the next 4 quarters in a row. So they're basically going to be spending, or they are spending 200 billion just in 2026, and that's more than they're making. So that's one thing being questioned on Google. Will they get good returns? But I'm a huge believer in Google. I'm a shareholder. They're beating like OpenAI at their own game. I love Gemini. So yeah, Google's a great one. Do you think it's good? Do you think it's a good price at current settings? Honestly, yeah, because of the 27 forward PE, like I would be like very lightly, if I like desperately went to Google, I'd be lightly buying here. Wouldn't go crazy, but I still wouldn't be opposed to like lightly buying at current prices of Google if I didn't like previously own them. But I certainly like if I wanted to buy it like meaningfully load into Google, it's not the time yet. You know, that was probably like a couple of days ago. Like when it touched under 300, it was crazy. It's like a 25 forward PE. But yeah, I'm a big fan of Google stock, and it's not even crazy overvalued. Even at all-time highs, actually, a maybe slightly better buy might be a Microsoft, because Microsoft is at a 22 forward PE. So there's like other stocks like Meta, Amazon, that might be a better buy before Google, but I love Google. So, oh yeah, I got to get to Zeta too and Meta. So Vertiv Holdings right here. What up, Dylan? Yeah, it looks good now. Oh, looks like General Dynamics might be the cheapest of the 5 defense names. Oh, well, what's their ticker symbol? Maybe we'll check out General Dynamics too before I go. Yeah, we almost been live for 2 hours. If y'all are enjoying, hit the like button. I try to stream every day. So here's Vertiv Holdings. This is your AI infrastructure play. With all the Mag 7, we just saw Google spending 50 bill a quarter, Amazon spending 50 bill a quarter, Meta 40 bill a quarter, Microsoft like 40 bill a quarter. That's straight to the beneficiary of a Vertiv. So yeah, look at this. Reports record revenue, 169% profit growth, and strong 2026 guidance driven by AI data center demand. So the data center expansion, this is a pure data center expansion play. And check this out right here. If we go to the revenue, this is what you want to see. I mean, record revenue, it's never been higher before, 2.88 bill of revenue, and record profits too. It's not just the revenue that's at a record, but the actual net income and profits, 609 million this quarter. So phenomenal. Deleveraging the balance sheet, like the liabilities used to be 73% of the assets. Now it's only 67. And they're buying some companies, or they're spending a lot on the future too. I'm a huge fan. They did a bill of free cash flow this quarter too. Anyway, they're probably expensive. So 43 forward PE, like it's you don't really buy it today, but if I was a shareholder, I would not be selling. Wow. Yeah, congrats. Yeah, a lot of these AI infrastructure names have been like Comfort Systems today. Dang, they're up 6% now. That's a crazy new all-time high on Comfort Systems stock. Another kind of AI CapEx beneficiary. I wonder if their earnings have finally loaded into the app. Nope, not yet. That's okay though. All right. Or what I want to go over real quick. What is I don't know which one to get to here. I'm so sorry. I've like 5 I want to get to. I don't know which order to go in. Let me just do Meta. Well, all right, this guy's been saying this weird stock. Let me do it for him. NEMKY. All right, we found it. It's a weird ticker symbol, and there's no volume. Bro, when I zoom in here, there's no volume on this stock. But they're worth $9 billion, so they're a European ADR, so that's why there's no volume. But so they do design, build, media, abroad with America. So we do have their numbers. Okay, so check this out. And this is in US dollars too. So we've converted it. They did 340 mil of revenue, up 22%. So revenue's up 22. The net income's up by 47. So they did 66 mil in net income this quarter. That's a record. Yeah, if we zoom out, that's a record net income. So I can kind of see why the stock's at an all-time highs, because the fundamentals are at all-time highs and probably beating expectations. There are no, because it's a European ADR, we don't get any like S&P Global analyst expectations, but I'm sure they have been beating on their earnings. Maybe some sort of, let's see, let's read exactly. So they do building and infrastructure projects. They design, build, and manage architecture, engineering divisions. So I'm sure with the complex data centers and stuff, they can maybe make some, I don't know, the stock's at an all-time low. It's a weird ADR. I'd just be so careful. There are probably better companies that are in the US, not an ADR in the same industry, that will benefit from the same kind of boom. But nice. Oh yeah, GD real quick. GD, General Dynamics. Then we'll do Meta. What up, Dino? And IDEXX. I forgot to get to that one too. It's an EU stock with a 78% market share. Yeah, hey, my bad there, Mendo. I wish I could give you more thoughts on that one, but it was kind of cool there, Mendo. Yeah. So here's General Dynamics. Who was saying that one? Dylan said, might be the cheapest of the top 5 US defense names. So yeah, even though the stock's at an all-time high or pretty close to it, let's see what the forward PE, even at all-time highs, the forward PE is a 21. So, which means they're trading at 21 times next year's net income. Here's what they do. They're actually very diversified. Marine systems, so maybe like submarines or something like that. Wow, that growth is phenomenal. Or no, probably like big ships or something, but that's up 21, after grew 16, after grew 15, after grew 5. So that growth looks phenomenal. Technologies and aerospace. Look at that boom in 2025. Yeah, 30% growth last quarter. Combat systems. So let's check out the bottom line. Yeah, here's their net income after tax. It's easily always over $1 billion. So it's kind of not growing too much. Like if we zoom out, it's not up that much from 2019. So maybe that's why the stock has a low multiple, because the EPS / net income isn't growing crazy amounts, but it's still growing like double digits, which are still good news. So what's the yield here? Yeah, and you get a 1.7% dividend yield, 21 forward PE. Yeah, I could see it continuing going higher. Pretty cool. Let's see, is there any news around this one? Nah, but pretty cool. So Indie Bro said, what is BLSH stock? I don't know. They actually, yeah, you're right. They IPO'd like 6 months ago. They're at this close to all-time low level. Kind of like a lot of the IPOs have been rough recently, like a Klarna, a Webull, a Wealthfront, and here's Bullish. I think this is a crypto platform. If I just had, so it is a crypto software company. In the management of digital asset platforms. So I'm guessing just like a crypto management asset platform. I don't know. Let's see what the revenue is. So the revenue, and that's actually crazy. I don't know if that's 64 billion of revenue, but on that they make no profits. They lose maybe it's an IPO fee. I don't know. See, there's just not too much data. They have a great balance sheet down here. Phenomenal balance sheet. I'm assuming this was a one-time IPO fee, because historically though, they don't lose that much money. I don't know, some sort of crypto platform. I'd probably rather buy Webull, but I don't know. GD does make nuclear subs and also destroyers. Hey, that's so cool. Michael said, thanks for today. I have an appointment for the doctor. Hey, good luck at that, Michael. I hope it goes well. And thanks for stopping by. I hope everyone's having a great Friday. Appreciate you. They're trying to stop your stream. You're putting out too much good info. Hey, thanks, Native. I appreciate you. Zeta stock. IDXX. Let me get to IDXX. Yeah, I forgot about that one. I always forget. I'm sorry. So yeah, I believe this was at like Animal Health Company Companion Animal Group. So it's like a niche name, and the stock's done phenomenal. They gapped up on earnings. They gapped up on the past 2 earnings reports in a row, because the past 2 earnings reports in a row have just been great. Like as we can see, the past 3 quarters in a row, they beat on revenue every time. That's the orange line, what the analysts expect. They beat on revenue, and not just revenue, but net income for the past 3 quarters in a row, and by a good chunk. And they beat on every metric, EPS, EBIT, revenue. So a triple beat for the past 3 quarters in a row. Margins are up. So revenue's up 14. Profits are up by 20. So yeah, and this is after tax. So before tax, they did 315. After tax, they did 250 million. So easily over a billion in net income. Well, more than like 1.1 billion net income a year. They're worth 50 bills. So, okay, so that's why they're a little expensive at 43 times forward net income. So I don't know if I'd buy this stock right now. But I mean, 43 forward PE, that's not too shabby. Companion Animal Group. Let me check out their website again. So diagnostics and research is kind of the industry here. Online tests. So maybe you can find like, it's maybe like a genetic test for your pets or something like that. I guess. Oh, they sell like the storage machines and everything too. So, animal health company. Pretty niche. I like it. All right. Great dip. They're worldwide. Oh, let me check out their revenue, where it comes from, actually. You said they're worldwide. Let's see. So yeah, look at that. So the US is 64% of the revenue. Then they're in a lot of other countries, and it's very diversified. So like Canada, UK, France, Australia, everyone around the world has animals, right? Or pets. So I really want to buy some, but the valuation at all-time highs holding me back. Yeah, I feel you. Thoughts on Google? Yo, Sean, I feel so bad. If you go back like 10 minutes on the stream, or maybe it's like 12 minutes, we did a deep dive into Google. Actually, let me do last one here, VOYG. But yeah, we did a deep dive on Google. So here's Voyager Technologies. I love this stock. Oh, wait. I don't know why I just said I love Voyager stock. I actually don't know what this company does. They're worth $1.6 billion. So they do defense and national security, and the revenue is up 30% year over year. In space solutions. So that business actually fell 41% year over year, but their other business grew. So when we combine all the revenue only grew 0.03% year over year, which is still not too shabby. But they did lose 20 to 30 mil. So what are they worth? So when you're only worth 1.6 billion, it's not great to lose net income and kind of miss on your, they missed on the revenue expectations. But look in 2 quarters, this is something to watch. If I was a shareholder here, I'd probably hold on for the next 2 quarters at least. I would not sell because they're expecting 60 mil of revenue. So that's something to potentially watch out on. So anyway, I hope you guys let's do Zeta. You know what? Let me do Zeta, and then I'll get out of y'all's hair. Zeta Global, actually, I don't really have much to say about this one either. It's a nice software name. I don't know too much about what they do. So they report earnings on the 24th. So in 4 days. So if you kind of buy them now, you're kind of betting on earnings. But they report earnings in 4 days. The revenue growth is phenomenal. Its revenue is supposed to go from 264 to 364 in just 1 year. And then, so the net income, they are still supposed to stay net income negative. But so you're basically buying this company right as they get net income positive. So yeah, if you look like a year ago, it was impossible to buy the stock. They were losing a lot of money. But look at the trend the past 2 years. They've just narrowed the losses every quarter. And now I think by this time next year, they're actually going to be making net income every quarter. So obviously you can't look at its current forward PE because they're just getting EPS positive. So that's why they're at a crazy 290 forward PE. That's because they have the smallest ever amount of PE. So you really do like a 2 or 3 year out multiple. I know they got like an OpenAI contract like a month ago. So some sort of software name, like AI software name. Yeah, look at that. I click on their website. The first thing is Zeta and OpenAI team up. Kind of cool. Yeah, they have this like Athena platform. Oh my goodness, that started playing something. Hopefully that didn't. Okay. That was loud. Oh, let's do PSTV, and then we'll do Figma, and then we'll do a portfolio update. So here's plus. Oh, and the market closes in 30 minutes. So I guess we'll see what happens. Dang, this stock is at an all-time low. So I feel bad if you own this one. Yeah, if you look in the top right, they're only worth $50 million. So I bet, just judging their financials, I bet we can figure out why this stock is only worth $50 million. I just like to think about this so logically. So they have no revenue. So if we go to revenue right here, I guess, well, that's weird. It's like, now look, the revenue is 1 million. So they did 1.3 mil of revenue. They're losing 4 to 5 mil. So they're not losing that much money. Like here's their net income losses. They're losing 3 to 4 million a quarter. Not anything too crazy, but like, it's just like, actually that is kind of bad. Because think about this, if your whole company's worth 50 million and you lose $5 million, that's 10% of your company. So nothing's really blowing me away here. They just have no revenue, losing net income every quarter. Like last quarter, this was it says they made 5 million. They didn't actually. They lost 1.5 million. Did they like sell an asset or something to do that? No. I don't know. I just wouldn't own that one just because they have no revenue and don't really have anything. So let me do the last one, Figma here. This is like a smaller Adobe. So they do what Adobe does. Adobe actually tried to buy this company, but the regulators did not allow it. Yeah, they just reported earnings and it beat on revenue. Analysts expected 293. They did 303. But they're still, dang, they're projected to lose like 100 million, 130 million for the next 3 quarters in a row. So actually, I don't like that. I don't know if this is like a one-time, it's not a one-time off thing because it really says they're supposed to lose 130 mil next quarter, 160 mil the quarter after. So they're supposed to lose a lot of EPS, but the revenue growth is good. Like it's super good, actually. Check this out. It's up 40% after it grew 50. So again, they just IPO'd. So this is all the data we get, but these are great top line growth rates. It's just it might just be a net income problem. Honestly, Adobe might be a better buy. Maybe. I don't know. So would love to looking forward to your portfolio update. Would love to see what you've entered recently. I haven't really entered anything new recently, but let me show you guys my portfolios. Let's start with Robinhood right here. I'll share with you every stock that I own, how much I'm up and down on them. Here's my total percent change on every stock. This is my dividend-only portfolio where every stock in here pays a dividend. You've probably heard of a lot of these before because they're in the S&P 500, like McDonald's, Google, Meta, Constellation Energy, United Rentals. How's the S&P 500 doing right now? So the S&P is up 0.57% on the day. Not too shabby. I also have a Roth IRA. A Roth IRA is just a tax-free retirement account. Basically, you can't withdraw the money till you're 55, but all your money grows tax-free when you withdraw it. But what is cool is you can actually use, like your Roth IRA, if you're a first-time house buyer, you can use your Roth IRA money as a down payment for a first-time house buyer. So you can actually use it if you're buying a house for the first time. And if you have some medical emergency, you can withdraw it tax-free or penalty-free as well. So that's my Robinhood portfolio. Every stock in here pays a dividend. Year to date, we're up 2.83%. We're actually pretty close, I think, to an all-time high. But in this portfolio, we did hit a crazy all-time high today. I'm so happy. I'm so grateful. Mainly from Comfort Systems. They're, as on the day, as you can see, they reported earnings, just gangbuster earnings. Crazy beat the orange line. As you can see, they beat on revenue, beat on net income, beat on every metric massively. So they're at an all-time high. We're up 301% on them. So that's what's led to all the gains in this portfolio. That's why we're up 34%. It's because I didn't sell or trim any of my shares of this company before today. And also, it's not just that one. Like Powell Industries has also done great. They're pretty close to an all-time high. Oh, Coca-Cola Consolidated is at an all-time high today. Amphenol, Amazon. So my latest purchase has been loading the boat on Amazon. I bought 7 shares. I spent, I think $1,400 buying Amazon on the dip down here at the 25 forward PE. It was just too cheap to pass up. So that's been my latest big purchase. I've made some small, like super small dollar cost averages. Like I've been buying Cormedics, Webull, and I bought a share of Innodata today. Actually, I forgot to mention that. I bought this morning right before I hopped on the stream. I bought a share of Innodata at $45, and it's slightly lower than where I bought it at. But yeah, that's kind of all the moves. So anyway, thanks again, AJ. Thanks to everyone on the YouTube stream. If you haven't already, make sure to hit the like if you haven't already. But thanks again, Egg Mayo, UZG, Dino, Philip, AJ Han, 6-star, Sean, Michael. And thanks again, if you're still here, Travis, for the $9.99 super chat, man. Thank you for that. You made my Friday. Everyone here, thank you so much. Have a great rest of your day. See you soon. Oh, if you want to support me, there's only one way to support me. I sell nothing. I have no course book, WhatsApp, Telegram, Discord. I don't coach, but I do have a YouTube channel. So if you want to support me, the only way to is just hit the like button and subscribe to my YouTube channel. I'm trying to build up my viewers on there because TikTok keeps messing my streams. So thanks again. YouTube channel is called Nathan Robert. It's also in the link tree in my bio. You can type into YouTube Nathan Robert. Oh, and if you want to get any of these apps I'm on, if you're getting into stocks and want to have an app to buy stocks on and analyze them, all 3 of these apps are all in the link tree in my bio. If you wanted to get any of these apps, this one's my favorite one. It's called Moomoo. Very first link in the link tree in my bio, and they're all affiliate links. So if you'd like to deposit $100, I think we both get like $5 of free stocks. So thanks. See you, Shark. Yeah, thanks, guys. See you tomorrow.